Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live in studio. We have a special guest today, Gary Brode.
Thanks for having me.
Hey, thanks for being here today, Gary, in Naples, Florida. And of course, we have our senior economist, Tracy Shuchart.
Morning, all.
Otherwise known as Shy Girl. Good morning, Shy.
Good morning.
So, how you enjoying Naples so far?
It's fantastic. I went out with Tracy for a great dinner last night. It's really nice here. My only complaint is some of the traffic lights take so long they should send snacks.
That's true. No doubt about it.
Right.
You know, I mean, Florida in general, I don't love the traffic situation here. It's just gotten overpopulated. Yeah.
Traffic situation is the worst.
The worst. I know, and it's getting a touch hot here. I know it's like record cold up north, but it's like 90 here. It's crazy.
I like that. I've been swimming at the beach.
Oh, perfect. Well, let's go into the overnight action a little bit here. Quick preview of what happened overnight. Crude's up 1%. You know, I saw gold is up almost 1% again. You've got rates 4.525, and the 10-year bonds are 111 handle again, and unable to really sustain any real rallies, which is something I'm sure we're going to discuss quite a bit this morning. And stocks rotating down a little bit. Russell down 1%, obviously, probably because it's mostly tied to what's happening with rates. And you've got NASDAQ, Dow, S&P down 0.5%. Nothing crazy. And I'm sure we'll dive into all of that today. But any news overnight, Shy, driving any of this price action?
So well, we had two big earnings this morning that people were looking forward to for the consumer. We had Lowe's that had still a drop in sales, but smaller than expected drop in sales. No words on, they said they had about 40% of their merchandise came from foreign countries. So, but they didn't mention whether they're going to hike prices or not because of tariffs. And then Target cut their outlook on shopper pullback. Now, they said they contributed to weakness in discretionary spending, declining consumer confidence, uncertainty over tariffs, and the company's decision to halt diversity initiatives. That said, Walmart blew doors off. So, I think it's more of a Target problem than really a consumer problem.
Yeah. And, we've talked about this before, right? This is a situation where the consumer is still spending money. I mean, we're not seeing a slowdown, and that brings me to something I wanted to talk with you this morning, Gary. I see a lot of conversations now on Twitter how the Fed may or should raise their inflation target, right? I don't know if you've seen any of this. It gets pretty controversial out there. It gets a little rough on X with all the brains out there, doesn't it, Shy? So, what are your thoughts on that?
So you're right. They've been talking about it for years, and I'm completely against it. First of all, the Fed's mandate, people think that this 2% number is a real number. It was made up by a European economist. It was actually 1%. They changed it to 2% later. But the Fed's mandate is stable prices. That's a 0% inflation rate. And I think, people hate inflation, but they don't think about the compounding of 2% over an entire working life. Right? If you work for 40 years, that 2% will rob you of about half of your earnings power. Raise that to 3 or 4%, you're looking at 80% loss of purchasing power over the course of your lifetime. So why anybody would want that, I don't know. Higher prices or unstable prices make people less certain about the future. It's not good for the economy.
Shai, what are your thoughts on this? Have you been seeing that on X, by the way, like how that's been kind of simmering out there a little bit?
Well, yeah, I think people have talked about that for a long time because it is kind of just a random number. And all the central banks just decided, okay, we'll go with 2%. But it was kind of pulled out of thin air. And I think that, I think inflation is going to remain a little bit sticky just because of everything that's going on. But it is near that 2%, 2.4% is what we're supposed to see in the next report. That said, what's really interesting is that everybody's been expecting these tariffs to really hit inflation, and we really haven't seen that hit inflation yet. So the bigger question is, has it just not come through yet? Or, is the worst to come this summer? Because everything that we're looking at, even supply chain risk is near zero at this point. So that's not even spiking. Though you have the consumers, according to the surveys, like the Michigan one that we just had, are, they're expecting, 9.3%, although that demographic depends on, skews towards whatever political party you're at. One thinks it's higher, one thinks it's lower. But, again, we're seeing a lot of banks, particularly Jamie Dimon, several times has come out and said, we think that, inflation's really going to spike. We're really worried about this. And they're not the only bank out there saying that. But yet, the data is telling us that this is not here yet. So the question is, and we can ask Gary what his opinion is.
Yeah, lay this out for us, Gary, because, one thing that we've been talking about every morning here is how the bond market can't hold any rallies on the long end. We know the Fed can't do anything about the long end anyway, but the long end continues to creep higher. A lot of us on this show believe that the 90-day pause initially came just because credit was getting a little bit worrisome, when bonds were going down at the velocity that they were. I mean, nobody ever wants to see a bond market move at the velocity it was lower earlier when we were going down with stocks. But now bonds are lows of the year. You hear people talking more about the Fed potentially raising this inflation. It's just because I think, as you said, Shai, it's not necessarily here yet, but it could be. And then ultimately you have, tariffs is still on a pause. We don't really know where we are. So kind of, I know it's a lot, but kind of help us understand what's going on here.
So first of all, higher rates aren't just a problem for the bond market. They're a problem for Treasury Secretary Bessent. He has to refinance $7 trillion in the next 7 months. The reason is because prior Treasury Secretary Janet Yellen basically shortened the duration of the U.S. bond portfolio. It was a partisan move. I understand why she did it, but it's not great. We could be looking at $1.5, $1.6 trillion of interest expense this year as that paper gets refinanced at the higher 10-year rates. So that part's going to be a problem. The other thing on the tariffs is, everybody's out saying that they're going to lead to inflation, and maybe they will, but that's also not what happened last time, right? We put those, tariffs in place in 2017, and it was so much of not a big deal that the subsequent White House, the Biden White House, left them in place, and everybody seemed to forget about it. The other thing, too, is I do think we're going to see a resurgence in American manufacturing. We've seen over the last couple of months trillions and trillions of dollars of not only purchase orders, but building here. And then the final thing that I think people aren't paying attention to, but should, there are risks to not decoupling from China. So I completely understand why some people are saying, look, we get cheap goods from China. If we decouple from them, everything's going to get more expensive. That's going to be painful. We don't want to experience that pain. That's a reasonable point of view. But, we found out last week that the Chinese manufacturers had snuck remote devices into the equipment used with solar panels, and they're now in a position where they could damage or shut down our grid. There's a cost to not decoupling. There's a cost to keeping those relationships, and I would like to see all of that as part of the conversation.
Yeah. Shai, any more thoughts on this?
No, but I do have a couple other items that I wanted to go over that happened overnight really quickly. As we had oil climbed spiked on a report that Israel was planning to strike Iran nuclear facilities, and we have pulled back on that news as we found out that it's kind of unclear when they're going to do this. Is it just a potential strike? But again, just to be aware that we still have this geopolitical risk as far as oil is concerned, and it's still very sensitive to that market. So if you're trading that, just be careful about there. And then on the tariffs, what's really interesting is the G7 is meeting in Canada, and you had the finance minister Champagne of Canada basically come out and say the G7 as a group is now discussing putting tariffs on low-value Chinese products. So once they were bad, now the whole G7 as a group is talking about tariffs, doing a group tariff on China.
Interesting. Let's go to the oil chart. I want to show everyone this. So a couple things. First off, overnight, oil made a high of 64.19. Yesterday, I talked to you about this. I got long the Canadian dollar now. I know you don't love that I'm long anything Canadian.
I don't like a long Canadian anything.
I can't believe I'm trading Canadian dollar. But part of it is this story with crude oil. I think that crude oil continues to go higher, and it did overnight. I mean, now I'm kind of looking at it going, is it maybe we're back to the top part of this range we've been talking about, Shai, mid 60s to mid 50s. I'm a little concerned about that from a Canadian dollar position, but also when I look at this, it's like, okay, the news is now actually. Well, this is what's interesting about the crude oil market. I don't know how much you watch crude, Gary, but we've been getting bearish news in the mid 60s, bullish news in the mid 50s, right? Shai basically keep bringing us back in. Now we're kind of getting bullish news up at the top. And I'm curious to see kind of what happens from here. That's my play of being, and to me, the Canadian dollar is an easy way to kind of express that view without having as much risk, because there's going to be a lot of volatility in crude. You watching crude much lately, and how's it playing a role in everything that you're doing?
So the thing that we think about in terms of energy is it's a great hedge for inflation, right? Most energy, oil in particular, gets priced in dollars. So think about what we were just talking about earlier in the show. They're talking about that 2% inflation target. And by the way, we haven't been there in 4 years, going to 3% or 4%. And the CPI is understated as well. So if the purchasing power of the dollar declines, you're looking at long-term higher energy prices. The other thing that we're looking at is there are several billion people on the planet who want a better material quality of life. And the correlation between a high material quality of life and energy usage is close to 100%, right? That R squared is almost 1. So I think we're looking at long-term huge increases in demand. And with debasement of the dollar, you're going to be looking at higher energy prices over the next few years.
Yeah, I mean, we continue to have this conversation on the show, as we know Shai is the best really at covering what's going on in oil. And it gets interesting here, Shai. If we start to push above this mid 60 level, anything that you're looking at, maybe in terms of prices going higher, and overall, what's that impact that we see on maybe stock prices or just the overall markets?
Well, overall markets is obviously, if we have higher energy prices, you have higher input costs for businesses, and so that is inflationary. And of course, we have Trump that wants oil to $40. That's not going to happen, because producers already said we just will have to cut production. That's that, as far as that's concerned. But on my chart, let me get it daily here. So really, I think if we push above this area that we are at right now, which is kind of a pivotal area, we do have kind of a volume profile void when we made that large move down. And then I have the next resistance at about 66.16. So we'll see if, we can, if this market pushes higher. Now, we know the sentiment has been poor in this market. Everybody wants to short oil. Everybody hates it. Everybody thought drill, baby, drill was going to happen. And now they realize no, because every, big oil producer came out and said that's not going to happen. And so, and we have a lot of shorts in this market. So if we could possibly get a squeeze if we move, a couple bucks higher.
Yeah. I'll be very curious to see what that does to the overall market if crude starts, showing with some force that low is in. I mean, we've had the mid 50. I don't know what the low is like, right around 55. But if you start taking out previous swing highs, which is the recent high is 64.41, and today's high is 64.19, you start pushing 65 higher. I mean, what do you think that means, Gary? Because this is probably the only market near like a kind of a breakout of a range that it's been into. What do you think that maybe does to the overall markets?
In general, the markets don't love higher energy prices, but I don't necessarily think in this particular moment that higher oil prices take the market down. And the reason is, in my opinion, the main reason for the recent drop in oil prices has been concerns about the global economy, right? People are worried that, tariffs and a reduction of international trade are going to lead to a worldwide recession. And, oil gets priced at the margin. What that means is that small decreases in economic growth mean large decreases in oil prices. So if people get more bullish about the international economy and more trade, that would cause oil to go up, but the market would be up on that as well.
Got it. All right, we're going to talk more in just a moment with Gary. We're going to get into some gold. We're going to talk about equities. We're going to talk about rates. But it is about that time. What's that, Shai?
One last thing. We do have, just to say, data today. We do have crude oil inventory, so that's going to be important. That'll be at 10:30, and I will be delivering that with Kane.
Oh, it's always I love the kind of the awkwardness of Kane in that moment. He's always like, "Hey, Shai, you're coming in there,
right?
And you're like, hey, you ready for oil? We're going to get him to trade it." So that's really the only data for today, right?
That is the only data for today.
Got it. All right, everybody. Next up, Jimmy Cagnina with this morning's Edge Report.
Good morning, everybody. Let's start with Treasury bonds. This is the 30-year bond right here. This is a daily chart. We just continue to smash through this area, long-term area support. We had at 112.08. Right now, we're tracking a 111 handle at 111.20. And remember, we have a 110 handle target from January. So this is selling off. Nice trend channel. We're back into it. All the moving averages are sloping down. Stochastics are in the basement right now. Intraday, there are some targets here intraday to consider. On the downside, you have that JAX1 level at 111.16. And then further down, we have S2, and that's approximately 111.05. That's not approximately, it's 111.05, and that's S2. And then JAX2 is 111 even on the downside. So there are some targets on the downside. On the upside, there's also a few here. We got that put support at 112 even number, no surprise. And then even further up, we have a 0 DTE high vol level at 112.16, courtesy of Mentor Q. Above that, the pivot at 112.21. So there's some nice targets here, but man, we're trading below that session VWAP right now pretty convincingly. Sellers are in charge. Let's shoot over to gold, because gold is another great story. Yesterday, you might have saw on the challenge, everybody contemplating trying to sell the highs or buy the highs. It was quite a fun trading challenge yesterday. Right now, gold is on the move, man. We have a continuation candle today. More green on the board for gold. Moving averages are starting to cross that 8 EMA, starting to cross over that 21 EMA. That VWAP now, we're trading above my anchored VWAP right now. So buyers are firmly in control. And remember, a couple days ago, this is still in play. That stochastics cross, you could see some divergence between the two lines down there. So that's bullish as well. Going to intraday, I know I have a lot of lines here. I apologize. Lines are good. It's kind of upside targets. There's a lot of them. We have the London initial balance frames the top of the conversation right now, 33.21. We have R1 and that Mentor Q 1-day max, and that's approximately that 33.25 level. Another blind spot, Mentor Q blind spot, 33.30. Going further up here, really not a lot of targets until R2, 32.57. On the downside, again, we got to break through that VWAP here, but JAX1 is at 3,100. So we'll keep our eye on that should sellers get involved in this marketplace right now. And then really that 0 DT put supports all the way down at 32.75. There's just so many great markets to talk about in such a limited amount of time. I do want to just pull up the Bitcoin. The Bitcoin, we had that huge rally at the end of the day. I'm not sure why we did, but we had a pretty big rally at the end of the day, and we are popping right now. We wick through this target wick that I've identified a long time ago, 107.470. Remember, this is a continuous chart and the futures. And so a little bit of a baby candle so far today. We're paused, but we broke through that area. I'm going to get rid of this rectangle. We broke through that area of resistance right now. So Bitcoin is also something to definitely keep our eye on going forward here. I'll give you some levels here if I can find it. On the intraday. Well, kind of the pivot's pretty much to find the bottom of the conversation. Yeah, we had a couple candles traded a little bit above it, but that's just natural volatility. That's at 106,500. S1 is very much in play down here as well. If we do get a sell-off here at 105, 325. Call resistance at 105. I got to think in hundreds of thousands, 105,000. On the upside, again, we're below that session VWAP, but we'll see if it holds. JAX4 right now is right here at 107,495. That's a gamma exposure level. JAX3, 108, 108,000. R1 above that is a target on a breakthrough above that London initial balance on the Bitcoin. So things are moving. Deli mentioned the Canadian dollar. We're going to be talking about the Canadian dollar with Mr. Shapiro, Crowded Market Report. Jason's going to be with me at 11 o'clock. We're also going to talk about the British pound sterling, because the UK had their CPI numbers come out and they were not warm and fuzzy. So we'll take a look at that currency pair as well. That is today's Edge Report. Back to you, Naples.
Thank you, Jimmy. We are going to start off by talking a little bit about platinum. We're going to get into the metals this morning.
Yeah.
We got platinum, silver, gold. Again, the metals continue to break out. Why do you think that is the story of the primary trends? To me, that is the story in the markets right now, Gary.
Oh, well, I think there are a couple things going on. First of all, we talked again earlier in the show about higher inflation that reduces the purchasing power of your dollar. So a lot of people are talking about gold going up. I would argue that a big part of that is gold remaining flat and the dollar losing value. The other thing is, we're seeing the bonds coming down, and so money is coming out of that sector. People are more worried about fiat, right? They're looking at gigantic deficits by not just the U.S. government. There's concern about Japan as well. Everybody has huge debts, huge unsustainable debts. And so, metals get priced in fiat currency, and the whole world is looking at these things saying, wait a minute, there's a lot of risk here. And, we've taken a look at it. There were 775 fiat currencies in history. They all went to zero, every single one of them. So it will decline. Gold holds value.
Shai, what are your thoughts on this? I mean, you've been all over the platinum story. I mean, the only reason I'm long platinum is because of you. I know it's kind of like, I'm just being honest. I said yesterday I did or it was 2 days ago, I did a 1-by-1. And then yesterday, after yesterday's close, if everyone looks at the charts, what I'm looking at now is anytime we get up in a Bollinger Band like this is to me a very bullish sign. So I look at the previous Bollinger Band peak and I look at this right here. So we're back in this area. I consider this unfinished business. I think platinum, heading to 111.15, and so on 115. Was that right? 111.15. What am I even saying? It's headed to 1,115.
Yes.
I'll get it right. It's a new market to me, Shai. But nonetheless, I think that when I see a move like this, you got to break out of a range, okay, and we get up in the Bollinger Band with the Bollinger Band expanding outward. I mean, platinum could be off to the races. I mean, I'm hoping so. What's the story, again, behind all this?
So we do have a fundamental reason behind this. Now, generally, platinum is considered kind of an industrial metal and a store of value, kind of, but not, even less so than silver. But what we are beginning to see is, first you have less EVs coming to market than anticipated. So that means more platinum for ICE vehicles that, we've seen all these car makers say where they're getting rid of their EVs and they're, keeping their ICE vehicles for longer. So you have that. We're also starting to see more demand as a precious metal, as an actual precious metal. We're seeing China just came out, their imports, yesterday their import numbers came out for precious metals, and they were up 11% for platinum. Their usage for jewelry is actually also up, not only in China, but also in Europe and the United States, because it is a little bit lower cost, but a precious metal. So we're seeing an increase in jewelry demand, which is outstanding, and we're seeing an increase in sort of that retail buying in these ETFs and in the physical and this, and we're up 28% on the year. So we're starting to see interest across the board, not only for the production uses, but also we're really starting to grab hold of that narrative as a precious metal stored of value.
It's a mainstream story. I mean, that's the bottom line. It's not just, the trader talk, right? Like, or, what's happening within companies. It's retail's using it. I mean, this is something that's got real demand. And like you said, Gary, with the weakening of the dollar, you've got the traders behind it. You've got the demand from industrial and from retail. There's real stories behind these metals right now. And again, I think when I look at the trends for this year, as we cover futures markets here, they're the most dominant trends. I mean, gold right now is kind of lagging, the other metals. I wouldn't necessarily say lagging, maybe is the wrong word, but it's not is quite as strong. Like copper's up 1.25% today overall. You've got copper still. It's not really. It's kind of just flat. I would be interested to see if that starts to pick up. Any thoughts on copper, Gary?
Only the basic one, which is it's a proxy for industrial growth. Going back to the prior comment on projections for the economy, right? If there's more economic growth, if people are building more, you're going to end up with more copper demand and higher prices.
Yeah, and I look at it for a similar situation to it, like silver. It looks very similar to copper. If that starts to get up, and I look at that, in these Bollinger Bands, it's always been good for me. Right now you're in a consolidation with the metals, but they're still relatively doing well for the year. Platinum is now the short-term leader, taking the metals higher. I want to get to bonds, Gary. Let's take a look at the 30-year chart again. Bonds are near the lows of the year. We've discussed this a little bit. One of the things that you see everybody talk about on X, and I've talked about this as well, is at some point do rates start to hurt the stock market? We go back to, if you compare apples to apples in terms of a chart of where we were with the 30-year bond, the S&P and the 30-year bond go back to, middle of April. When they made lows, we were on lows. Right now, that's not the case. We're nowhere near that in equities. At that point in time, that story made sense, right? It was easy to use that as a correlation. That is totally broken. If anything, it's gone the opposite way. At what point, if at all, does this story start to matter to stocks again?
So it should matter because, right now you have money coming out of bonds and into equities. That's the typical historical relationship. But, if we go back just a few years, the reason we saw huge decreases in the market when inflation went up was people started to take a look at the big tech companies, the high growth companies that make up the majority of, these indexes. And you start to discount their future cash flows at a faster rate, right, at a higher interest rate. And, we're in a position where you don't have to take down 400 companies to take down the S&P 500, right? 5 or 10 of those companies having meaningful declines if the market reprices. And, you could end up with a material drawdown in the S&P 500.
Yeah. Well, let's go to the S&P chart. And, you look at where we are, and this box that I have here, Gary, is just the opening range for the year, because I always like to see where the S&P futures open for the year. And so basically we're back to unchanged on the year, down roughly nothing. Really. How are you positioned in this market? Of everything we talked about today, we talked about dollar weakening, metals strengthening against it. We didn't even really get too much into currencies, but obviously it's the same kind of scenario if other currencies are they're going to be doing good against the dollar. We didn't mention the yen and yields in Japan, but just overall, how are you positioned right now?
So on the inflation protection side, I have huge positions in Bitcoin and gold, and large positions in energy for the reasons we talked about. On the equity side, I own a limited number of really high growth equities, and then I have market hedges in place, either position short the S&P 500, short the NASDAQ, or long puts on the indexes. And all I'm trying to do there is isolate my ability as a stock picker to generate alpha. I'm just saying I don't want to make a bet on, whether the next 10 or 20% in the market is going to be up or down. I'm going to make a bet on my ability to identify the right stocks to be in.
Got it. And just overall this environment, what do you think about it? Just like we saw this unbelievable move lower. We know it was tariff driven, and we know that the market was really, it was overbought and overpriced. I think a lot of people would agree with that. It was just the news that gave it the nudge to take us lower. But then you have this just ripper higher, man. This thing has been unbelievable. And even today we're down modestly, 0.5%, and everyone's like, oh, here we go. And, it's incredible, I think, this rally. I saw somebody put it out the other day. It was like almost a 20% rally off the lows, and it was only the fourth largest bear market bounce, if this is a bear market bounce. And I was like, only the fourth? I think it was Warren Pies who put that out. But,
yep, yeah, it was him.
Yeah, and and I look at it and go, where are we right now?
Yeah, so first of all, the market, you're right. The market is definitely not cheap right now. And, people are looking at sentiment, and every time, the White House has a post out about tariffs, the market will trade an enormous amount based on that. But I also think fundamentals matter. So let's, take a look at the equity market, we have record levels of consolidation, where you have, the S&P 500 is really being driven by 7 stocks. So if we go back to the end of January, beginning of February, when we had that big DeepSeek scare, right? The market went down pretty heavily on that because everyone was worried, oh no, AI spending is done. All of our big tech leaders are going to be taken over. And then what people realized was it wasn't that big a deal. There weren't shortcuts, that, that all of these companies were going to continue spending on AI, and everything came right back. So I do think part of it is being driven by fundamentals and earnings, which have by and large been pretty good.
Yeah. Shai, anything that you got for Gary? We've only got him for a handful of minutes left. Anything you want to talk to him about?
Yeah, I think I think I want to bring up the BOJ, and because a lot of people are talking about it on X. I know it's not the U.S. market, but it is still being talked about, and it's part of the larger picture. We had a tweet out from, or a post out from somebody today that said, for the second day in a row, Japan's bond market is bidless. Both the 30-year and the 40-year JGB yields are at record highs. So, what does this mean for the rest of the bond markets?
Yeah, so I think it's a huge deal. We started talking about the carry trade back in October of 2022 and saying this is going to be a gigantic problem. And so what's happening right now is Japan they have a currency problem, right? It's a small island nation with very little in the way of natural resources. They have to import, by and large, energy, and that gets priced in US dollars. They have gigantic budget deficits, and they're getting what they needed to do, which is they really needed to raise interest rates. But doing that increases their budget deficit. The only way they can meet that need is to print the yen, and that puts more pressure, right? It leads to more inflation. And so as this is happening, people are going to have to start unwinding the carry trade, which, nobody knows exactly how big it is, but I've seen estimates in the tens of trillions of dollars. When that happens, the US bond market is really going to have a problem, because you have people who are long the carry trade who are long US treasuries. And so when they unwind the carry trade, they're going to have to sell treasuries, and that's going to be a bigger problem for our Treasury Secretary. We're going to have to refinance at higher rates, and when that happens, we're going to have the same budget problems that Japan is having right now.
2 minutes left with you. Lay out the rest of this year. I mean, so far this year, we've gotten a lot of information for what the market's thought about tariffs, what we think the Fed is going to do. I think at this point now, as we get in the middle of May, which is crazy to think we're in the middle of May already,
I know,
but
right?
This year has set somewhat of a tone. What do you think we see going into the rest of this year?
I'm bearish on bonds for the reasons we've been talking about. I still like gold and Bitcoin, again, as a dollar debasement trade. I understand why people are really worried about tariffs, but generally when it comes to tariffs, the level of market response or hysteria has been greater than the reality. I don't think it's going to be awful. I do think President Trump will come back with, at least some deal somewhere. One of the things that I think is really interesting, I think people are underestimating the probability that we end up with better trade deals, right? That we could end up not necessarily with higher tariffs on our end, but our trading partners may be lowering their tariffs for US goods. So that would be a good thing. And, equities, they're at high valuations, but unless we start to see some sort of major recession happening, I don't know that we're going to have any kind of market crash or something like that. So that's been my view on it, and that's what I'm positioned for. But, with that said, my personal portfolio, I'm positioned for my stocks to do well, and I'm just hedging out the market risk on it.
Yep. It's interesting. So far this year, we saw sentiment get too negative, probably too positive right now, where there's always somewhere in between. And maybe stocks just are kind of okay at we're maybe near these levels for now. It'll be interesting to see if we get any closure on any of these tariffs. I think it really will obviously we talked about setting the tone so far this year, set the tone for the rest of the year. I think that the uncertainty will start to creep back in. Time right now, I don't think is on this administration's side, because I think that the more time we go without really knowing what stuff is, if stocks lose momentum, that's where I start to be like, okay, what happens? And then all of a sudden bonds start to gain momentum lower and gold continues to do what it does. Where do stocks find its place? So it'll be interesting to see what happens. That's why we're here every day. Shai, any final thoughts for today?
No, I think that's it. Just I'll be back at 10:30 with crude oil inventories. Given kind of what has happened overnight with this news, it may be important, it may not be important. So it's kind of a toss of the coin today. So,
Yeah, no doubt.
I'll be back at 10:30, you guys.
Yeah, that's right. And following this, of course, we've got Pharm, we've got Kane, we've got Jason Shapiro, COT data. But Gary Brode, great to have you here this morning. Go to deepknowledgeinvesting.com. That's deepknowledgeinvesting.com. Follow Gary on Twitter. It's Gary_Brode. We will put those links in the chat. Gary, great to have you in studio. Great to have you here in Naples, Florida. I can't wait to do this again. Thank you so much.
Thank
Thanks
you.
for hosting me. Looking forward to coming back.
All right, everybody. Let's bring in the big guy. Let's see what he's doing. We're getting ready for Pharm. You're not the big guy, Shai. There he is. Wait. Oh, okay. He's got the maroon color on today. I don't know what it means. I know that there's this market somewhere talking about what shirt you wear and what that means for the market. I mean, are you aware of this? It's pretty popular.
I call this color blood, Deli. I call it blood.
Blood?
Yeah.
Got it.
A little bit of blood overnight.
Yesterday, 45 half to 50. You talked about that as a key area to keep an eye on. We got through it. We had a decent sell-off. Decent. I mean, what was it, 20-something points? Then we had a move right back up to it again. And you look at it again, it's like, you know what? Trying to be short is not bad. Staying short is impossible. I mean, to me, that's the theme. It's like you can be short, but you can't stay short. And I think that's the most difficult thing about this market right now. And again, we come in today, you heard everything from Gary and Shai this morning, down almost 3/4 of 1% in S&P and NASI and Dow. You're down 1% in Russell, probably just because of what's happening with rates. You got gold, platinum. Did you hear I was long platinum? I don't know, we'll talk about that. And other things doing well today. You know, it's like, what do you make of this market right now?
Yeah, I mean, yesterday I was a little bit brash, and you know me well enough to know that when I start getting that way, it's because I kind of smell something brewing potentially. And I do think that equities, got a little bit fatigued. Today's going to be a really important day. But I mean, you have hard assets going crazy right now because of, inflation fears, inflation 2.0 fears. And, equities generally get a supportive bid out of that as well. And we'll see, if the money stays in equities or if it's rotating elsewhere. I mean, there's only so much capital to go around, right? So if everybody's chasing metals and, other things, then, maybe it's time for a little bit of a pullback on equities. But, we'll see. No damage done yet, which we'll get into the charts in a minute.
Yeah, let's go into the charts now. I'm going to start off with the metals today because, it's great to have Gary in studio, again, getting insight into, outside of our short-term world. I mean, even for me, I talk about this. I'm a swing trader, and I look at things on a, multi-day time frame, which is still very short-term to the majority of the world, right? For me, it seems like an eternity to hold a position that long, because I'm still kind of built as a short-term day trader, but nonetheless, getting that perspective. And also, chat, good morning, and, hit that like button for Gary and for Shai for this morning. I thought that was fantastic. Again, yesterday, I talked about this with Merritt. We hit 130,000 subscribers on YouTube for NinjaTrader. It's really incredible. We're in, week 9 for this, and to get roughly 2,000 subscribers a week. So hit that like and subscribe button. We really, we just truly appreciate that. I mean, that's awesome. And so thank you everyone in chat very much for that. But getting back to that, getting that perspective from Gary, I think that is, it helps us because for me, I like, okay, how are the bigger fish being positioned? And, and it's funny because as gold, when we look at gold, I don't think that psychologically we always initially think of, okay, weakening dollar is what's lifting gold. Maybe gold is staying where it is, but where the dollar is getting weaker, gold is going up against dollars. And so I think that's an interesting perspective, right? And so when you look at what's happening in metals and then the demand issue that Shai talks about from retail with, manufacturers going to buying platinum because it's been cheaper than gold, even though when you go to buy platinum, it's much more expensive. I've done that a little bit, and you're going to pay a lot more than you're going to pay for gold, but nonetheless, you're seeing the flock to buying that, so you're seeing supply come in or greater demand for that. You continue to hear about the overseas demand in gold and how that plays out. And when you look at these trends, when I look at them, when I zoom out on them a little bit, I mean, look at the gold chart. Let's go to the platinum chart again. I'm long platinum, small position, but nonetheless, I think it's headed up to 1115. Not too soon from now, I hope. Silver, when I look at silver, all these charts are, left to the right. I mean, somewhat consolidation potentially, still looking to probably try and go higher. I mean, they're not bear markets by any sense. So I think that these markets are still something to note as futures traders, as like these are still the stronger primary trends when you get into stocks and stuff. I mean, stocks have obviously had a wild move, and we'll get into that in a minute. But don't discount looking at. I think a lot of traders should be looking at these metals markets because I think that they're decent trades. I mean, and they trend a lot more than most people think, and so they have micros for them. Let's get into today's action with the bonds. This is the part where I look at this here, Pharm, and go, okay, this to me tells me to be short bonds. I'm not, but because it's one of those things where with the bond market, I'd have to put a stop up in here. We're not quite in that downward Bollinger Band like I'd like to see. I still think we're headed to 109 and change. I look at the bond market and go, it's a sell the rally market. If it takes out yesterday's low, or not yesterday's low, 2 days ago's low, which is 111.15, I think you could see a steep move lower. What does that do for equities? I don't know, but it's something to keep in mind. I think that bonds in general right now would not step in front of this on the buy side. And I think that it peels over into what we're looking at here into equities. The area that I have boxed out and have just been impossible for me to trade it, I've done absolutely nothing but scratch trades in this area. Only one trade, to be honest with you, and it was the puts. It's like now we're back below opening range for the year, and you got these moving averages straight up like that. And it's just as like when I look at what's happening, the top Bollinger Band's gotten flat, the bottom Bollinger Band's coming in. I just see a consolidation here, Pharm. I see nothing in equities. Again, it's such a day trader's market. Focus on your short-term charts right now, everybody. Lean more on people like Pharm and what Tanya is going to show us and what Kane will talk about. For me, from a swing perspective, it's just impossible here. It just really is. I don't know what to say. I cannot initiate a position in these markets. Very difficult to manage risk. And I try to give you that perspective from a medium-term time frame trader, was that there's just not a lot to do. Trend is up. Yeah, it makes sense to have a pullback, but where's support? For me, the only area I see any support coming in is this old Bollinger Band, which I talked about here, down in this area, 58.60 to 58.40-ish. If we were to get down in there, I'd start to look for longs, but that's still, I mean, it seems like it should do it, but can it do it? That's all I've got. I'm leaning more towards trading metals right now. To me, platinum is clear. It's breaking out. I could manage my risk there. I think bonds are bearish, although I'm not short it. I think that's a better trade. Equities, consolidation, two-way tape. Let's see what you got.
Yeah, you're right. There's not any kind of a clean setup that I see on a high time frame basis. We are just consolidating here, maybe potentially starting to see some weakness. And it's a situation where, if you're trying to be short, you really need some trapped inventory up above you. You need some supply trapped, right? You can look at levels all you want, but until longs are stuck, you're not going to get a meaningful move down. So in terms of staying short, I think we said earlier is spot on. Anytime I'm trying to fish for a short, in a bullish trend, I'm just covering on the way down and avoiding getting my face ripped off until there's some kind of actual like setup on a higher time frame. And that's where we're at now. At the beginning of the week, we talked about, a 58.85 to 58.90 was holding that bulls weren't any meaningful trouble. We held that, basically at the overnight low Sunday night into Monday, got the huge rally, pretty much a lockout at the open on Monday. And then let's see, yesterday, so I guess it was actually, Monday night, we finally came up and we tested higher first and failed at these 59.90s. And I mentioned that, testing, if you test lower first in a bullish trend, this dip's going to get bought like every time. And this was the first instance we saw where we tested higher first, we failed. We ended up with a look above and fail of the prior day's high. And now we've looked above and failed the prior week's high, which is a potential bigger picture short setup, or at least setup for weakness, right? But until there's follow through, there's really nothing doing. The one thing that I'll say that has me, and I mentioned this yesterday morning, the same thing here tonight that has me interested, just very subtle nuance. And I know I do a bit of that, but yesterday we had a set of open single prints during the overnight session at 75. And I mentioned just before we got off that I was kind of surprised they hadn't filled. And then they never did during cash either. And the tape, stayed pretty weak yesterday, certainly weak relative to what we've seen. We did get yesterday's buyers, liquidate through that 45.5 to 50. But yeah, then it popped back up because that's what liquidations do, right? They just retrace intraday. And now here we are back below the 45 to 50 spot. I'm just using 47 to 50 for today. And we have another set of open single prints from the overnight session that did not fill on that lower high there. So it's very subtle, but I find it interesting that, maybe we have a change. We did trade below an overnight low. We still haven't taken out a cash hours low, other than, opening below a cash hours low on Monday and engulfing the whole thing. So on a cash hours basis, we haven't taken out a prior day's low. So yesterday's low is going to be extremely key to me. We're currently trading below it, and whether or not we can drive away. But again, still there's not any major damage. If you look at this trailing week, and that's what we talked about on Monday, these buyers aren't in horrible trouble at all, right? We're still well above, the volume point of control. That's where the overnight low is sitting right at last week's volume point of control. This to me was covers off that. And I'm definitely interested to see if sellers step back in and they can drive this down to, let's say, the 58.80s, 58.90s today. I think that would be like your first kind of major accomplishment. And if you go back to the daily, it's just going to kind of form, a bit of a box here. And then maybe later on you get some kind of a box trade set up for, a bigger picture swing. But until then, you're right, it's two-way trading. Whether or not we can reclaim yesterday's low, either into the open here in the next 45 minutes or after the open is going to be meaningful. So just very, very subtle shifts to me that I see. We do have expiration today, and sometimes you can get a change in character outside of expiration. To me, the subtle change was that failure on that move higher first. That found some follow through. But if you just kind of like zoom out, big picture structure, you've got a major swing low here that hasn't been violated yet on an all hours basis. And again, we have not during cash hours opened and driven below a prior day's low. So whether or not we can do that today, I think is going to be key.
Yeah, I agree with that assessment. And like you said, let's see what the selling is really made of today. And I love knowing that the overnight low is that volume point of control from last week, because it shows that first of all, it shows that anyone that was short overnight looked at that area and said, hey, this is an area where, we'll probably step in and look for some covers. And now let's see what they're really made of. That's the thing, Pharm. With equities, I think one of the hardest things for people to understand if you're day trading S&P or NASDAQ every day is that not when the markets are what I consider them really in play, when they're really, at least for my strategy, and I think this goes for everybody's strategy, is going to be variances of what the environments are. They're not in play every day, and they need to start proving some things too. We have been in this tape that has not proved much of anything besides there's just, this passive buyer on every dip, right, Pharm? I mean, that's all we've seen, and technically that becomes difficult because it's like also the windows of opportunity near any lows have been so short that a period of time that it's like, okay, unless I'm just on auto buy, it's been difficult. Let's see if this opens the tape up a little bit. That's what will be interesting to me.
Yeah, that's what I'm looking for as well. And I mean, again, keep in mind, I mean, there's some people that get angry when you talk about a 1%, 2% pullback. I mean, we're up quite a ways, right? So, I mean, a pullback would be constructive. I've been talking about, a potential back test of this prior consolidation range even would be fantastically bullish to me and constructive. But, until or unless we get a multi-day break of, some kind of a multi-day balance break to the downside, there's nothing meaningfully bearish here just yet. And like, even if it does, again, I mean, you're just looking at a proper daily high or low. Like, we still haven't even had one. I mean, where's your daily high or low on this chart? It's here and then rip face and then consolidate in a range and then rip face and now consolidate again. So it makes sense, I think, to generally favor upside resolution out of some kind of a consolidation range. But if it does break to the downside, then you finally get a decent pullback, and that doesn't need to be terrible. And again, to me, it's all about, where is inventory stuck, right? And at this point, it has changed a little bit. And the reason I say that is because we traded overnight on Sunday night into Monday, and we traded, past last week's primary distribution. It got bought. So, like, if you were stuck, if you were stuck short from last week, you had that opportunity to get out. And based on the open on Monday, I mean, it looks like a lot of them got out. I mean, right? Like, that was the day where, like, we maybe traded a tick below the open and then just straight moonshot lockout. And now that we come back to last week's VPOC and like hold it kind of perfectly, and like, look at the 5. It's kind of like a no red candles allowed type thing on the way back up. To me, I read this as voluntary covers. I think Monday was sort of like, I don't want to say involuntary, but kind of like, oh, thank God I can get out type of thing, right? And so, like, you just kind of panic cover. This to me looks like I'm going to be smart and I'm going to take covers because I'm going to reload higher. And so for me, I had stink bid covers overnight for the second night in a row. So I'm flat at this point. Do have some puts still from Monday or whatever. But flat on ES anyways, and I'm open to trading this both ways, but I feel like something's changed, and I'm very much looking forward to seeing if there is follow through today. So whether or not we can, again, here we are sitting just below yesterday's cash hours low, which was 26.75, I believe. So I want to see if we can sustain below that low. We can take out an overnight low and maybe drive for the Sunday night low into Monday. I guess it was Monday pre-market low. But again, like, I'm still not even like super bearish at all above 58.80s. And then, like you said, I mean, we could still come down to 58.60s, 58.40s. I like a lot. And then this could just end up being like some kind of 2-week, or like we still even have next week. We could end up forming a giant 3-week balance in here that's still just two-way trading, waiting to make a decision before we break either direction. So, I mean, there's not a whole lot going on here, big picture, just yet, until we see a clean break of some kind of multi-day, multi-week consolidation. So, patience on expecting any kind of big move in either direction, I think. And it does make sense, perhaps, to favor bulls here. And I'm just a little bit cautious on that front, feeling like there's just a little bit of a subtle change in character here.
Yeah, I agree with that, and I think that's where we're headed. I think that we are just consolidating up on the highs. It's hard for the bulls to gain momentum at this point. We've gotten so much good news, and a lot of that came towards the tail end of this rally. I don't, even if Trump were to say buy stocks today, I don't think it would get the same response as the past, but who knows? I think that a lot of this is baked in. I think ultimately we are seeing, the things that have been working go back to working. And I think that equities are in just a sit and, wait mode. Again, bonds, what's been working? Selling the rallies near lows. What's been working? Well, platinum is breaking out a little bit today. Silver, gold, copper, all up today. Those primary trends are back in play. Equities down modestly, but again, it's like, trade your levels. I mean, embrace that this is a two-way tape. Embrace that this is a day trader's market. Just don't overtrade it. I mean, that to me is the key in this market. Wait until we get some more clarity and more volume and volatility. And then maybe, for me, I always am trading bigger and more aggressively when the tapes are more volatile. When they're like this is death by 1,000 cuts for probably a lot of people. Easy to overthink, easy to overtrade. Find the areas you like. Find better ways to execute them. Become a better executor in this environment. To me, that's what this is about right now. Not trying to be too cute with it. You're not going to probably get huge moves. Adjust to it.
Yeah, get some in good, right, on a short time frame execution. And if you want to hold runners because there's continuation on that position, go ahead. I was short 59.90s on that overnight trade setup. The look above and veil was the setup, and I'm already covering some, for 7 handles, right? Because I don't know if it's not just going to rip right back in my face, but runners can run, and they work. So to me, short time frame execution at good areas, good locations, and then if you see the continuation in the direction, go ahead and hold some runners. For me, I just never let a green trade go red. I mean, I don't want to say never, but I mean pretty much never. So that's my thing, is that I just don't like taking losses. I like money. I want to have more money, and that's where all of you guys come in. And so that's where I'm at. It's okay to trade your bias at a good location. You can still be wrong for the day and still make money. You mentioned one thing, and it reminded me. I'm going to forget when we get off here, but so remind me if I forget. You mentioned the Trump saying it's a good time to buy stocks. I think we need to put an anchored VWAP on those instances. I haven't looked. I have no idea, but I just suspect that there's probably something to it. So I'm going to try to remember to do that after we get off and look up exactly when he said to buy stocks. I bet it's relevant, and you see multiple touches if I had to guess.
We need to go over this tomorrow. You need to have those up there, and so we can go over. We need to have a discussion on this. And we could probably search those dates relatively easily of when he said that. ChatGPT. When did Trump say buy stocks or Grok, whatever? Yeah. I haven't really used Grok yet. I've used it maybe a couple of times. Have you used it?
Yeah. Just a couple. Yeah. I don't know. I guess first mover advantage. I'm kind of stuck using ChatGPT. And I've used Grok a couple of times as well. So yeah, let's try to remember to do that for tomorrow. That'd be kind of interesting. Be surprised. Things like that they just tend to work out,
Yeah, I no doubt. I mean, and like I said, you go back to it, it's like, I'm not the biggest conspiracy theorist out there, but if you remember back when we were talking about this day, I don't remember when it was, but we were like, all of a sudden the market turned on a dime, remember? And then that was the next day was like the 10% rally. And we were like, well, we kind of know why there was, bidders there. And again, it's one of those things where it's like, Trump has been spot on about when to buy stocks and when he said it. So I do think that there is something to it, because it's probably an anchored point for a VWAP to see if there's any retracements, what happens there. Wouldn't it be something if we saw from the first one to the second one? That's when the other announcement was. That would be something to see.
Mm-hmm. Yeah,
it would be.
We definitely need to get into that signals check.
Go ahead.
Yeah, we definitely need to get into that signals text group for sure.
Yeah. Well, thank you so much for today again. We do this every day from 8:30 to 9, Pharm and I. We have fun with it, as you guys know. Make sure you follow Pharm on Twitter. Check out what he's doing with his Substack. And like I said, the best thing about Pharm is that he keeps it light, but he's very serious about his work, and I love that about him. And tomorrow we're going to be joking about this VWAP from the Trump buy the stocks, and it's going to be a very interesting trend that you and I are going to dissect tomorrow. So make sure you don't miss us. Hit that like and subscribe button so you hear Pharm and I talk about that tomorrow morning. Pharm, have a great day today.
You have a good day, Deli. We'll see you tomorrow morning for my Friday, if I've got my days right.
For your Friday.
Mhm.
All right, next up, the favorite setup of mine on this network, Miss Tanya. Good morning.
Good morning. Good morning. What a morning. How are you doing, Deli?
Yeah, I'm doing good. Again, every time I see your backdrop, I'm like, man, that just looks so good. I'm so happy for you with that setup. It just looks great. And but getting into markets, look at you heard probably Pharm and I talk about this a little bit. It's one of those things where I believe it's truly a day trader's market. I talk about my swing setups and what I'm looking at, and there's just been so little to do. And I know that you go through the multiple time frames,
Yeah.
but when we get into what's happening on the bigger picture, maybe if you, bigger picture for us is what's happening in the last week or two. It just feels like a consolidation, and it just feels like there's just not been a ton to do. What are your thoughts on it?
Yeah, literally the same type of thoughts. It's more of like a scalper's market. Some people that do like to trade the ranges. I don't love it. Barely been taking many trades. Yesterday I tried one trade and that was it. I walked away. It was pretty much like consolidating the entire session. Couldn't find any bids. So yeah, not really looking forward to today either. There's no red folder news. So I'm honestly, I mean, I'm looking at the charts. I'm like, I don't even see this as worth it for me. I might just go do something else today. I don't know, because it's just not. Yeah, I'd rather just wait for the market to make a decision because it just seems like, yeah, it's been consolidating. I had this marked out from yesterday, this 4 hour fair value gap, and yeah, we just overnight just now actually we closed below it. So it doesn't, we're not catching any more bids to the upside for more swings higher. And it makes sense because, like, how many swings have we got? Like, to the upside, like one, two, that was like the third one. And now we're, slowing down. Um, the fact that there's no red folder news until tomorrow really makes me like less likely to want to even really be an active participant today. In the past couple of days, there hasn't been much either. There's just been a ton of Fed speakers. So I have previous day low marked out, and it seems like we're rejecting it on both of the indices. So now I'm like removing this and because it's no longer something I'm so interested at. And yeah, yesterday we had like these 4 hours, and you can see not much movement. We had huge wicks to both sides and small body candles, and that's where trading's really hard because it's not one directional. There's no follow through to either side. So I'm fine with waiting until we do get some follow through. And yeah, we have I marked out previous day. Let's see here on the daily here on ES and NQ. Now that, you know, it's not much of a swing high because it's been so like gradual. So I don't really love that, but like we could now take out this low from the 19th next since that was the divergence, but now we've invalidated some upside movement. So I would think that that's the next point that I'd be interested in. If I'm going short, I'd be going to go for this area on NQ, like 21,113-ish. And on for let's see, for ES, I'd go for here. Let's see. And I feel like you can't even go for much because the fact of the wicks on both sides and we're catching bids, so it's like not going for home runs here if I'm going to take a trade. 58.93.50 or even here. If that fails, then I'd think we'd go to here, 58.67. But like I said, I mean, this is the market. Like I've probably taken the least amount of trades this month than any other month because there's just not much follow through to either side. It feels like, okay, we had a huge drop. We had volatility go up a ton. The average true range was like 1400 on the NASDAQ. And now I checked yesterday And the average true range of the NASDAQ is like 350, and that's the lowest it's been 3 months since like March. So it makes sense why, you know, why I'm not finding many trades or not much follow through because we're having these tiny ranges. And I'm okay with waiting it out until I start seeing that the ranges get larger again because there's just simply more, it's just more forgiving than for and easier to trade. If you're having expansions and continuations, much easier to trade. No one really thrives in consolidation. So that's that for me. I don't really, honestly, I don't even feel like trading today. I'm not gonna lie. Like this is one of those days. I mean, I think it was even on, what was it, like last week or something. We just consolidated the whole morning again. So I don't really see much here. I mean, I go through all the time frames, but all I need to see is always like the 4 hour. And then, I can look at the 15 or something, but like there's no we like this might be look like some people might think this is a V-shaped recovery, but it's not really a point of interest that came into for me to want to look for longs yet. I think that the longs based on the 4 hour have been invalidated for now. We could go lower, but it could be a painful move, slow move lower, kind of like yesterday, like yesterday, I mean, it was really ugly on the on the 4 hour and on the 5 minute. Like this is what we had to deal with on the 5 minute for the entire New York AM session. Um, and yeah, I'm not very optimistic for price action to just turn on a dime yet because I don't see any, unless there's some random news driver that comes out. I'd rather just wait until the ones that are in the economic calendar. So yeah, what do you think about that, Deli?
I agree with you. We need a spark. I mean, I am not doing much of anything in indexes for the last, 2, 3 weeks now for me, which is a long period of time in a year that you think it's going to be busy all year after what we saw early on. I mean, it's so bad that I'm trading Canadian dollar. I'm long Canadian dollar and platinum, two real small positions for me to kind of keep the juices going. But for the most part, it's like I look at equity indexes every day. I try to give my view on what I think the market outlook is and market environment in the morning, and it's just like we're in limbo. We're in a consolidation. And again, it's a day trader's market. Either you embrace it's going to be quiet, you lower expectations, you get better at executing your strategy in this environment, or you don't trade it. But you don't overtrade this market. That's the biggest thing. Right now, I think the mistake more people will probably make is when we shift into an environment like this is they overtrade it. They overthink it. That's the mistake. And it's great to hear you say that you're not doing that because, again, you know yourself, you know your strategy. If it's clear, then we go aggressively. Then we're not patient. But when it's not, that's when patience is really tested.
Yeah, exactly. I mean, I'm literally looking at this and like, all right, yeah, there's not much for me to do here. We had the long side kind of invalidated for me there, and I see that we can go for those lows, but I don't see any large like moves like, to the downside for me to want to find points of interest there on the 4 hour. It's not like we're closing below like this low with a fair value gap lined up with it. There's just been wicks, even overnight. I mean, and the fact that we kind of did moved lower overnight again during London. I don't know. Like New York can be another consolidation, especially if there's no red folder news. So I'm kind of just not very optimistic about today being a good price action day. I mean, I'll have alerts in, but I don't, yeah, this is not where I put my, like, the pedal to the metal. I'm not putting a lot of risk down. I sized lower, and even so, like, yeah, I took a loss yesterday, tried to long, ES, and then I was like, all right, well, that didn't work. And then I was like, that means that the market's not going to really do much. And I was right. I just walked away. And at least then what I learned is that I could be more productive with my time, with the rest of my time versus like in the past, maybe I would have stared at the screen the entire day and still not found anything or been tempted to overtrade. Now I could do other things that are more productive for my time and help my mental game instead of hurting it. So yeah, this is not my market to be really aggressive.
That's the number one way to attest to your growth. I mean, that's the thing. everybody out there, ask yourself this question. Look at what Tanya's talking about. Look what I'm talking about. Are you confident enough in your abilities to know that when things are good, you stay on it and you keep your foot on the gas, and to when it's not, that you're okay with just walking away? It's hard to do, Tanya.
Yeah, and I was talking to a friend about this, and they were mentioning, yeah, actually that even though might not be taking many wins recently, or not might not be taking many trades at all, and it kind of feels annoying. It's not like you're changing anything in your preparation. Actually, I feel like I'm more prepared than in the past because I'm totally like even keeled about it, versus maybe uh in the past you could get shaken up by having a couple of losses in a row or whatever. But it's just the fact that the market is not currently rewarding that preparation. Just have to wait until it starts to do so again, and then you're smooth sailing again. But yeah, I'm hating these smaller ranges. The way that I'm gonna know if we start getting better price action. I mean, easily just start check the ATR every day and see if that's increasing or not. Um, and if it's, I mean, it's been pretty ugly. I mean, I could even pull it up. Let's see here. Um, let's see. Like I could pull it up and then we could take a look at that. But the ADR, it's really, really annoying. See here, apply. Okay. Yeah, so
And Lucky
this is, I'm
Kane,
gonna go on the
Lucky
daily.
Kane gets another banger day.
So yeah, we could see here how it increased a ton. Here was 1400 per per day, obviously, when we had super high volatility, and it was still good. It was, I mean, it was lowering, but we had really good ranges. We had like 1,000 more than ever. But now you see how the lines decrease all the way down to 355 a day. And you could see here, when were we this low? We were back in March. Like this was not, we were not this low on the ATR since March or February. So but it makes sense why the market feels a little harder. It's especially if we just had large ranges, now we're having these small ranges. I'll just wait until, we start finding uh larger ranges again, and that'll be pretty easy to see if I start seeing this like line creeping up again and seeing it on the daily candle in general, and seeing if we're having any follow through on the hourly and the 4 hour. But other than that, I'm like, no, this is like, it makes sense why I might be getting frustrated with the market a little bit with just the 4 hour, for example, yesterday. I mean, working both sides, and it's like, all right, whatever. That's it's gonna happen. What's gonna happen. You can't do much else. You can't force your will onto the market. And that's basically it. I mean, I do not feel like trading today, to be honest.
Yep. No, I hear you. I mean, I'm not touching equities myself. And like I said, it's Kane gets another banger day, and we'll see what he's like coming fresh out of vacation. I'll be talking with him in a moment on it. But Tanya, as usual, it's great to hear your thoughts in the morning. We do this Monday through Thursday, and I think I mentioned this to you yesterday when we were on. But yeah, we hit 130,000 subscribers on NinjaTrader Live, which is amazing. We're week 9, and we started at like 112, so almost 2,000 subscriptions a week on NinjaTrader Live. And really can't thank you enough for being here with us in the mornings. And go have fun today. I mean, I know you're probably going to do your stream, but I love the discipline to know when not to trade. It's extremely important. And then we'll do this again tomorrow morning, and then we'll see. Maybe things do get shaken up today, and we get a busy day tomorrow morning, and we'll talk about it then.
Yeah, thank you so much. I mean, honestly, I really doubt I'm gonna do my stream if I know that I don't like the marketplace. I mean, I put some appointments in for my day later on, so yeah, I can be forced to step away from the computer, and those are little just things I do to fill up my day instead of getting caught up on the screens, which is so easy to get absorbed into it because we love it. But yeah, good luck and good trading. Good luck to Kane. He's got an interesting structure to deal with today. And yeah, Deli, I'll talk to you tomorrow from Thursday.
All right, Tanya. See you later. All right, everybody. It's Wednesday. What is Wednesday on NinjaTrader Live? Well, it's Trader Kane. But Trader Kane put a note in this morning in the chat. He goes, I'm not coming on until we get 500 likes. We're at 191. You guys better start hitting that like button because you guys know how Kane is. He stays true to his convictions. He doesn't do things he doesn't want to do. And I don't know. I don't know if we could force him in here. We're only at 191. I got to see it at least get up into the 300s and know that we're on the way to 500 before he comes in. This isn't me saying this is Kane. He's turning me into streamer boy. Is that what he's doing? I think there's a whole plot here that he's working on with me. I don't know. I don't know what's going on. I'm gonna have to talk to him about it. So anyway, again, it's Wednesday. It's about that time to trade the open with Trader Kane. There he is, fresh off of Dubai. How you doing, my brother?
Yeah, I'm good. Yourself?
Look at you, man, smiling with those bright white teeth. I mean, I'm telling you, it's you're turning me into a streamer boy over here too. You're really something, man. I'll tell you. But how was your trip?
Yeah, it was good. Look, I I needed it. I was getting really burnt out with the markets, as probably a lot of people are. So yeah, it was nice. Weather was good. It wasn't too hot, despite everyone telling me that it was going to be 1,001 degrees. It wasn't. There were a couple of days it was really hot, but I mean, what? I mean, you can just go inside, it's not the end of the world. But yeah, it was nice. And I seem to have skipped the worst week of price action in the history of mankind. So I think it's a win, right? In my head.
I mean, how often does anybody get a chance to go on vacation and have it be a slow week? It's like a blessing. Every time I leave, it's busy. Everyone probably says this.
Yeah, I mean, look, I definitely kept my eye on the market, and look, I publicly bought puts, and we went up 2% shortly after I bought puts. So I'm still underwater on my puts, don't worry. But other than that, they're long dated, and yeah, I'm slightly leaning a bit more bullish than normal. But I still don't think we're clear out of the water yet. I want to see us get really back above here, and then we're obviously in all-time high land. But yeah. Crazy market.
So no positions right now.
No positions. No positions. And to be honest, look, I take no shame in admitting, first 10 days of May were horrible for me, like actually horrific. I lost a decent amount of money. My conviction, my trades in the market went pretty much against me immediately every day. And yeah, I was down a decent chunk of change. Come back, took a win yesterday. Yeah, yesterday afternoon took a win. Just one and done. And then today I wanted to potentially long around the 6 o'clock open level, but I was in the gym, so I didn't. But yeah, I missed out on this move. And then we're kind of just rounding off, right? Like higher time frame, we're just rounding off, lower time frame, rounding off. Everything's starting to round off. Buyers look like they're getting exhausted. Again, I say look like because I'm not an order flow trader, so I don't actually know what they are or aren't doing. But from a candlestick perspective, we get these pumps and then we get these slow bleed offs. All it takes is for us to open up, selling pressure kick in, and this thing just melts, right? This gap up is scary. Gap up, rounding out, scan pump on Monday, take out previous week high, down only since. Yeah, it's not looking good for bulls, in my opinion. But then again, Deli, I always say this, what changes for me, because I'm just always bearish. So I've been bearish this whole way up, made some good money, but probably luckily. And then yeah, we're starting to round out again. But yeah, I think we could go up. I just want to see a strong closure above here, probably at the back end of this week. And then I'll officially flip bullish, like actually bullish.
Boy, I mean, it'll be interesting to see how it does pan out in this moment right now, because we've been talking about how it is in such a consolidation and we need a spark. I mean, that's the whole thing. I mean, the data has been almost nothing. We're through earnings. We're through a lot of the Fed speakers. We're through so much of this stuff. The market needs a spark. I hope that we do start to see some structure change in the markets. But I want to talk about something with you real quick before you get into the charts and really get into the trading day. Two things you mentioned, I think that you can give a really quick lesson to everybody that's listening. One is you said the beginning of May was a little bit tough for you, but then you went on vacation. You're also coming off of that time where you've had some downtime. Talk to us quickly about like how the mindset shifts a little bit when you come off a little bit of a drawdown, then you take some time off, you come in. I know at least for me, that's, you come in, you're a little bit slower, just because you've taken some time off, you're relaxed, you've now kind of absorbed the loss, you feel like it's kind of behind you, but you can come in now and do a tape that's really quiet. And so the real test right now is right in front of you is like, how do I start getting back into this and getting some rhythm in a tape that's really not giving much to me? What's the mindset?
I just need to go for those smaller moves, right? I said this really not obviously last week because I was away, but the week before, I got very point hungry. And I said publicly, like, don't get point hungry. And then I realized, well, I probably am getting point hungry. So, and again, to reference Tanya, when the average daily range is in the thousands, and we're going up and down 1,000 points, on an hourly basis, you can quickly get these huge moves that pay you such a silly amount of money that you then get greedy, and the money sitting on the table that you're in, 2, 3, 4, 5 minis, however much you trade, that money's good money still, right? And sometimes you can leave that on the table on the basis that you want to catch that random tweet that's going to happen. But the reality is, it's like, okay, fine, adapt to the market conditions. There's volatile moves, and try and maximize those as much as possible. They're just not happening now. We're just not getting those moves, and sitting in a trade all day for what's potentially never going to happen is just silly. You need to save your mental capital. Go back to base hits. I'm a big advocate for base hits, right? Go back for base hits. My trade yesterday, I was done in 20 minutes, right? And I captured like 200 ticks. Like, what's that? 200 divided by 4, 50 ticks, roughly ish. 50 points, sorry. Just boom, done. Thanks, I'm out. That's not a big move. Like, if we look back at the last couple of months, and that paid me a good amount of money. I'm happy with it. And I think come back off a break, reset, understand where your edge is and it isn't. And I'm big on putting the pedal to the floor when the market's in your favor. And the market was very much in my favor in April. It really was. I made very good money in April. Start of May, I had my foot to the floor and I got my ass handed to me very quickly. Not like, people have DM'd me like, did you lose all the money you made from April? No, not at all. And I'm very much up on the year. But from a data perspective, first 10 days of the month, if they're red, then I chase that red into Wonderland, and that red only gets worse. So I come back, refreshed, downsized. I'm just looking to execute my model when it appears. And if it doesn't appear, I don't execute it. So that's really all I can say. We're in this tight range right now, and I'll play this range until we break out of it. And if we break out of it, I'll typically take a loss. And when I take the loss, I can then get back to the normal way of trading. So, yeah, that's all I can really do.
Yeah, I'm so glad I asked you that question, and I think that a lot of these newer, younger traders are going to listen to you and understand that's such an important part of growth, that is so important for your growth and for others traders' growth. So I'll never forget a time I walked off the trading floor and I had been just killing it. And I walked off the trading floor. I was walking down the hallway to our office, and one of the traders had been around a long time. His name was Gary Lev. And I'm walking down the hallway with my head down. He's like, "Hey, Ant, what's up?" I'm like, "Oh, man." I'm like, "I just, I had a shitty day." And he's like, "What happened?" And I said, "Well, I'm up $1,250, but at the time prior to that, I was making anywhere between $5 and $50 grand every day, right?" And so I started to get in this path where it's like I couldn't get up as much. I was like up or down a little bit, and I was like super frustrated. He pulls me aside and he grabs me. He goes, "Hey," he goes, "you never have that attitude." He goes, he goes, "You make $1,250." He goes, "If you made $100, you never be upset about that." And it was weird because I was getting in this mindset of like, I set my expectations so high that when I was coming down and it started to get not as busy, that it was like I was just not on. I was just not. It just didn't feel good. Like I almost wanted the rush more than just the money in some ways, and so of course after that period, I remember myself going back into a drawdown. But I'll never forget Gary pulling me aside and being like, "Hey man, be happy that you're in the business. Be happy that you're making money. Never hold your head down." And always stay positive and adjust to what the climate is. And it was just one of those things. I think it's important for you. I know you don't have somebody necessarily physically around you to be able to do that. And for you to be able to make that adjustment on your own as time goes by, that's going to be one of the best assets that you have, Kane, because that's what's going to keep you in the business longer. And you and I text each other all the time. And what is it that I always say? Stay in
the game.
And that's right, man. So I appreciate you sharing that with us. Glad you're back. I'm glad you wore a hat today, because if you came out today with the hair all done up, the teeth shining, you know, I mean, like I said, he's coming in. He's cutting me out. I'm telling you, he's getting me to do the streamer boy stuff for him before we go. I'm getting the likes for him. I got to do everything for him. I don't know. I don't know what's going on here, but anyway, it's great to have you back, my brother. And have a great day. I will talk to you later.
Appreciate you. It's great to be back, and have a good day, brother. Speak to you soon. Chat, how are we? I hope you've all missed me. I know it's just only been a week, but still hope you've missed me. No worries, AB. We'll all wait for you to grab your glasses. Don't worry. We're waiting. Let us know when you're back. Missed you guys. Yeah, I've been busy, right? Like, took a bit of a break. Shab, how are you? I got my teeth done, top and bottoms, full veneers, non-invasive. And yeah, so the gentleman Leo stepped in for me the other day, last week. Grateful for him. He'll be on later today. So if you miss him that much, if you turn up at the open, just the close, sorry, I'll be there with him. I won't actually be there with him. I'll be in the chat. Sorry, that's false advertisement. But maybe we can arrange that soon. Let's see. But yeah, feeling a bit refreshed. Seem to have avoided the worst week of price action known to man. We got that scam pump on Tuesday last week and a gap up. And other than that, the week kind of did nothing. And yeah. What puts do I have? I bought puts on literally the open of last Tuesday. So we mark out 9:30 open on last Tuesday, which I think is right about here. Yeah, 9:30 open. I think my average is just above this high on QQQ. So we're not a million miles away. Well, there's definitely some leg room, and they're not expiring for well over a month, so they're not actually down that bad right now. But yeah, I thought we were going to gap up, scam down, and I just wanted to be in the middle of that. And I think we're just we're just chilling up here. If this, I kind of said to myself, we get a good closure above this level, I'll cut them. We haven't got a good closure above this level at all. In fact, we got this closure, and that was just Brode of a previous day high, and then we're just falling off. So higher time frame, what are we looking at? Weekly high has been taken, daily high has been taken today, and it was also taken yesterday. No, it wasn't taken yesterday. Sorry. It was taken yesterday, and then today is we're getting that expansion down. So realistically, all eyes are on like this sort of area. We scammed up. So for me, we just mark premium discount from here to here. And realistically, what I'm looking for is some sort of closure in and around this area. Well, not closure, but at least a wick. Some sort of wick here that can send us higher. And then if we don't get that, then we'll just play what's in front of us, right? You lost all your money? Okay, fair enough. That sounds like a silly thing to have done. Yeah, apologies for everybody that... Why puts? Because I don't really need to have stop loss. I can just size puts for failure, right? That's a good thing about puts. But again, I'm not going to get too much into options until the NinjaTrader team bring futures options to the platform. But ultimately, for puts or for options plays, I just size them for 0. So like I either get the move and I get out around where I'm looking for a price trade to, or they just leave them and they die. And that's like I size them based on that stop loss. Where on NQ that would have to be crazy. I'd have to like adjust risk all the time, So trading 5K account. Yeah, the account was at 5K yesterday and it's at 12K today. I took a trade yesterday, but I'm going to reset it for on Monday. So yeah, not actually trading it today. So yeah, if you didn't watch my latest YouTube video or you're not inside the lab, the consensus was we were going to just take a bit of a break, come back, trade a very small account and look to compound that. Yeah, I mean, look, it's a very bad market. You've just got to understand the market dynamics you're in, and play what's in front of you, you know? Yeah, I think the account balance on this is like 12K right now. NQ is at yearly, well, they're both below yearly open, actually. You can see that from the 12-month chart. We've got the open coming up, though, so we'll look at that in a second. Let's have a look. What's the balance? Yeah, 12,380 bucks right now is in the account. 215. I have no idea what you're talking about regarding mentorship group because I quite literally haven't posted anything anywhere all day. So if you think you're speaking to me, then I can assure you that's not the case. Yeah, I appreciate your numbers, man, but my risk management is definitely on point with it. Don't worry. Oh, yeah, I haven't said anything anywhere though. Listen, if you think you're in a mentorship group for me that isn't the lab, you're not. So don't get scammed by anybody, okay? The only thing I the only thing I offer from an education standpoint right now is the lab. That's it. Don't get scammed. Okay, we had the open. This isn't really going anywhere. Finding some sort of traffic. H4, H1. It's looking good here. This could just buy up into this midnight area or into yesterday's open. Yeah, no impulse, just the open. I think I might be able to just use this. We could just take this. Could be a nice trade. What's this? 3R. We'll see how we approach this area. Yeah, I get into moves on the way when they like. So, for example, yesterday we can just go over it because I don't really mind. Yesterday, I played a 15-minute inversion right here. This was the trade, right? So I traded this, and literally I got in here, and the moment we lost the opening range, I added, and I exited everything at this low. So small position here, like 100 tick risk. It ran 350 contracts. So my average entry at this point was like here. Because why? I can average in here and my stop loss can just be above this high and I can just average in. But again, yeah, I actually was never under, well, other than some small drawdown at the very, very start, the moment I got into the trade, that none of that trade was ever in the red. So I could just be break even on that trade the entire time. We got good flush, got out, and then the market just did nothing for the rest of the day. So yeah. Are we bullish, chat? I don't think so, Khan. Not right now. I think we just went up. Don't think this necessarily constitutes bullish behavior. I think everyone's expecting some sort of low resistance liquidity run here, or just some pump to take out some of this. I don't know. What does the RTH chart say? Because that is the truth after all. Oh, nothing. Okay, fair enough. Okay, what is meant by taking out the day's high or low? It just hasn't clicked for me yet. I don't really understand the question. What premium discount range am I currently working off? The higher time frame one. This is just a range, so we're just going to keep trading within the range. High to low. This is discount. Low to high. You can just use the current daily high. Did we do this? Yep. Did we do that? Yep. Yep. Everything. So it's probably just this right now. So if this got taken there, it's respecting. So yeah, we're just in a very tight premium discount range. So No, I use the first 30 seconds. I don't actually use the opening range. I just use the opening range as an area to determine where the open is. I don't actually use it as strong confluence. If you want to learn more about the opening range, your Pax is your man. Because at the moment I just use the first 30 seconds and it's just the logic from Pax as to how I got that. But I don't actually use the opening range to get in and out of trades. So yeah. Leo, how are you? What indicators do I have? Just the opening range, the midnight mark being marked out, the Asian range indicator, and then basically I just use the fractal model for the time frame alignment indicator. Might sell this. What I want to see is maybe not. We'll see. We'll see. We'll see. Yeah. Just want to see some sort of push and then some acceptance back inside, and I'll look to short that. Kind of invalidating longs for me. The private indicator I use, it's just an SMT indicator, and no, you can't have access to it. I tweeted about it, and if you persistently bug me for it, you will just be ignored. Don't think I'm being rude. It's just it's not for sale and it's not for use. So it is what it is. Yeah, Darren, you definitely have access to it. No worries, mate. Anyway, chat, how are we? We're at 423 likes. We're about 15 minutes into the stream, and there's 1,600 of you here. It's appalling behavior. It's absolutely appalling. So 1,000 of you, well, over 1,000 of you are asleep behind the wheel. Outrageous. Outrageous. The Lux Algo SMT indicator. Yeah, you should use that one instead of my one. Yeah, use that. Honestly, I don't care what you do and don't use. You just can't have mine. Don't. You know, I genuinely don't mind what people use. You just can't have my one. Give me the SMT indicator and you'll give me 2K likes. Give me 20K likes and I'll give you access to it only. There you go. The ball is in your court. Oh. Oh, we're missing the most important thing of the day. I need my anchored VWAPs on. Wait. How on earth am I going to trade without these? Come on, where's the open? Oh, we're rejecting the globe. No, we're not rejecting. We're finding support. Here we go. Oh, exactly. Real order flow. Just order. We just trade order flow in the form of VWAPs. Am I right, chat? Am I right? Leo's like, oh, VWAPs are not order flow. Kane, what were you risking on your 5K account yesterday? Well, the most I could possibly risk was 5K. So I think that one through. Doesn't really matter how much I risked. So, but minis wise, I think it was at one point was 4 minis. I would love for us to just sit here for the next 5 minutes and then with the new 15-minute open, trade higher, trade lower, and then get a 10 a.m. open below here and it just collapse. That'd be nice. You don't know how it's struggling to push here. I imagine there's quite a lot of sellers in and around here. I imagine there is a lot of absorption at this level. The delta is probably flipped. Um, I don't know, what else can I say? Um, what else, boys? Listen, I'm just order flow curious, as Leah pointed out the other day. I genuinely am order flow curious. You longed at the open. The bull flag was there. Fair enough. Fair enough. Uh, my acne, my skin is a lot better. Yeah, I had a really bad allergic reaction to something like 3 months ago, and it ruined my face. For those wondering, I'm not. Listen, by the way, just to be clear, I am not trolling Orderflow Labs. It's just some friendly banter that me and Leo have. I respect those guys so much. I don't want anyone to sit here and take it like I'm taking digs at them or anything like that. I every single day watch the Orderflow Labs guys at the close, and quite often we'll watch Stowe's stream. I respect them a lot, so I don't want people to take it like I'm taking digs at them because I'm really not. Typical ICT guru gatekeeping indicators. Okay, what do you want me to say? You think that's gonna make me release it? Right, I could not care. You just can't have it. Just accept that. Like, I don't mind you being upset about it, but just accept that you can't have it. Like, Kane, can you explain what validates a low time frame SMT when you were looking to engage? Um, I am genuinely, yeah, I'm genuinely jealous of the order flow guys. 100%. I don't care admitting that. Being able to look at the order flow book and the orders coming in and out of the market, that sounds like a lot of information to me, and I would probably be a bit overwhelmed. I'm being honest, I really would. Yeah, Justin, no worries, bro. I'll catch you next week. Nothing's forcing you to stay here. I'm just waiting for the market to give me what I want it to see so I can trade. Um, took out that 4 hour high, took out that daily high. No 15-minute high, 15-minute open up, take the high. This is the short term range. Yes, really struggling. Where the real order flow, I guess, in my head is. Above 5 minute, above the open. Trading at midnight. Are we? Where's midnight? No, the indicators load, do its thing. 15-minute open. Yeah, Khan, you flip bias every 5 seconds, my boy. It's crazy from you. You are hot on the tape all the time. Okay, we might have a setup here in the next 2 minutes. We'll see. I can explain what a lower time frame SMT validates it. Nothing validates it, so why don't I just wait for something that validates it and then I can show you. But if you're going to try and use that to code an indicator that's similar to mine, don't, because it's just not, it's not, it's not going to happen. So yeah. Why am I taking digs at OFL? Brother, you are late. I cleared up that I love those guys and have a lot of respect for them. Jesus. Jesus. Guys, we're still only at 500 likes. What's going on? I I went away for a week and you guys got stingy with the like button. What the heck? Come on, click the button. Yo, the Brabus is doing good, my boy. It's drinking fuel, but it's doing good. It's doing good. I love it. I was thinking about getting a 765 LT McLaren. Thoughts, chat? Thoughts? I was on holiday, yeah. My grass is doing well as well. My model and T-Trade's model are not the same, but yeah, I have no money. I'm very cool, nice long, my boy. Why would I feel? Where does ES have equal highs? Tell me where the equal highs are. Where are equal highs on ES? Tell me. All these up here. If you tell me the level, luckily you can finance that McLaren. I think financing a car is really irresponsible, to be honest with you. But whatever. Especially that kind of car. Can't stop being so mean to Riz, bro. Like what the 15 minute 5-9 uh 5-9-3-4 equal highs. Where are the equal highs? Here. You think these are equal highs? What makes these equal? These two here. Or and this. Like these are all just equal highs. Yeah, but Khan, it's still not nice to comment on people's weight, regardless of what your opinion on it is, bro. Not gonna lie. Not going to lie. Anyway, let's see if we can get some sort of hold above here, and then we can look to short it. Tagged midnight. That's crazy. Yeah, the chart fanatics video is good. It kind of gives away a lot of my model, which I don't try and gatekeep. I give it away on Twitter every day when I post about it. So, if you're interested in watching my model, you should check that video out. It gives away a lot. I think I might have to just wait for 10 here, chat. Really, what I wanted to see was like a nice impulse. This all at the start of the 15-minute candle, and this 15-minute candle just sell down. All eyes are on the VWAPs crossing. I'm assuming this is something incredibly bullish. I don't know for sure. I still need to go back and rewatch my course I made on VWAPs. It's definitely money, yeah. Like all I really care about is this, right? Weekly high swept. Daily high swept. 4-hour high swept. All around the same level, and then they sold it down. Okay. They brought it back up off of yesterday's or Monday open, which is where we got that big push up. Fine. So what do I care about at this point if this is my bias? If I'm long from here, where am I looking to take profit? for those that watch the video, where am I looking to take profit if I'm long from there? %, logical liquidity target. Yeah, because the way that I understand price, and again, this is completely dependent, and it's just, independent to me. Everyone can have a different opinion on this, but this is how I make money, is I look for to trade the pullback from here to then either go higher or go lower. And all I care about is this move. That's it. So now I just need to see that push above. Daily high taken on the higher time frames, 4-hour high taken down here and all the way up here. Fine, we have some liquidity up here. Hourly highs taken. Hourly highs taken on the low, so I'm expecting it to pull higher. Hourly highs taken here, 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 even here. So this for me is just a bearish retest. And I'm not trying to like just short this, stop above here and get crushed and get crushed and get crushed. I'm looking to wait for some sort of push, run everyone out of this trade, create some sort of momentum to go long, flip that momentum, go short, and then sell it down. That's it. That's all I do every day. That's all I do. There you go. Slowly creeping up the light count. Now I need the next 30 seconds to begging for likes is not good for professionalism. Is this Colin? As in Colin, or is this just a different Colin? Did I code the indicator? No. That's a bit above my pay grade. Have I ever been to the Netherlands? A bunch of times. I have a couple of Dutch friends. Yeah, I mean, it's just horrible, mate. Sumo, it's one thing we can agree on. I'm sure you're long off the RTH lows, though, right? I actually did look at that today. I'm not even joking either. I was like, if we accept back above here at the open, it's just going to go up. No, fair enough. Fair enough. Do I have any? I do now have Hungarian friends. Thank you. If we fill gap, my day will be done. Sounds emotional. Did you tell me we were going up? Yes, you did. Okay. I'm gonna sell here if we get it back in. There we go. It got ticked in. Seemed pretty lucky to me, if I'm gonna be honest. I don't know how we got ticked in that quick. I'm not talking shit to anyone. It's just when people tell me consistently we're going up, we're going down, we're going up, and they flip by us every 2 seconds, and I don't get to see anyone's trading, yet you all get to see mine. It's negative EV for me, isn't it? You're always right and I'm always wrong. Only the times I'm right publicly am I right. Do you know what I mean? So, whatever. Everyone's right in this game, all of the time. You know what you need to understand. Why they're short here? Um, because I'm looking for acceptance back below this level based on us. I kind of explained the reasoning for what I was looking for. If it happened, I would get short. I wanted to see this 15-minute high that opened at 9:45, trade above the high, create some sort of displacement, run everyone out above midnight, and then I would look to play some sort of acceptance back below. If it doesn't happen, it doesn't happen. If it does, it does. So yeah, so this 30-second here, 9:51, bang, creates the high. Now trade back below it. Now all I'm anticipating is that this level will hold for us to trade lower. I wanted to see a bit of a better closure below midnight, but yeah. Well, I kind of want to see this trade before 10 a.m. to be honest. I want to see this trade but before 10 a.m. so I could potentially get some sort of bounce at 10, but it doesn't really matter. Does not matter. It's very small risk, 81 ticks, one contract. We're good. Why did I choose a 30-second? Because I'm playing the 15-minute high. But it didn't sell down, so I'm not really bothered. It's the way the cookie crumbles, the paper cuts we take sometimes. Bit too much hostility. Yeah, chat came on smoked today. Just constantly, yeah. It's too bullish. Yeah, I mean, look, luckily I have an 81 tick stop loss. I don't have unlimited risk on this, So you can just rewind. I explained why I've taken the short a few times now. Yeah, what validates a lower time frame SMT here? For example, this SMT here, they're both printing. NQ took this high. I mean, I'm just using this 30-second, but you would need to see a closure below this leg. So yeah. Profit hit. Good job. Good job. 5974. Gee. 5974? What are you expecting? 5974. That's quite the move. I mean, that I'd like us to get up there today. But what is that? That's a 0.7% move. That would mean that ES is meh. Do I believe in macros? I believe in hourly and hourly opens and closes. Yeah, if that's what you're referring to. Do I believe the 20-minute between that hourly open is some magical algorithmic timing? No, the only official algorithmic timing in the market is the 950 market on close algorithm. I can't remember getting close. Honestly, I don't remember being scared about this trade voltage, but thank you, bro. I appreciate you. I'm just going to stick to my guns, and if it happens, it happens. All I'm trying to do is trade this 15-minute candle. If we get a closure below here before 10 a.m., I get to go break even. That's it. So I'm anticipating this 10 a.m. candle closes below this one, and if it doesn't happen, I just close the trade because then the whole idea of it is that it didn't happen, and I get the next, I think, minute. Yeah, the next minute it needs to close below this level. Let me just make it a little bit bigger. And if it doesn't, I'll just close the trade. Or I'll just go break even. So I missed 3 a.m. London. I did miss London today, yeah. I did miss London today. I actually missed 6 a.m. 6 a.m. was a better trade today than 3. It's getting a bit close. I'm just gonna move my stop loss to break even here. I either want this to close and I go break even, or it doesn't close and I go break even. So I can just do it now. Right? That's like the logic path in my head to do that. And it didn't. And I get taken out. Sweet. That is good. Because now I can then play 10. So we are officially down 0 money on that trade, which is good. Well, the thing is here is like I need this candle to close below. If it doesn't, I'm gonna close it. So I just go break even because it's 50 ticks, whatever. And if it does, I'm going break even. So I can just go break even in either situation, right? So now all I'm looking for is a 4-hour high to get taken. This high up here. That would have been my stop loss. So it's kind of counterintuitive to my trade, right? Bounced off of ES VWAP perfectly. The turn stopped me out. Yeah, I'm okay with that. Like the rule for the trade there is that I don't want to be in it if that happens. So I need to stick to that rule, because if it doesn't play, if I hold that and it goes higher, I still have a short bias, right? Because at this point, I then, like, we didn't get an hourly close below this level, so there's no reason to fade to look for shorts here for me. So now I need to see some sort of hourly high taken. So it's that 9 a.m. high, which is also that 4-hour high. All right. And if we do this and take all of this, this is even better for me. So I don't want to be in that trade and I don't want to be long to it right now. To make sense? Makes sense to me. What am I trading? I'm trading, there we go. That's basically what I wanted. I just got caught in whatever that was. What was that? I imagine there is a lot of people trapped up here. What just happened? Four-hour high taken. Daily back above. Yeah. Now this is even better trade for me. Oh yeah, I don't have my sorry if you heard me drinking. That was really loud. It's okay. I can just start my new squawk. Have that in my ear. Let me just make sure that my sound is correct on my laptop, on my desktop. Sound. External headphones. Yep. Should be good. Right, I'm back, chat. Can I tell you why? Because what I look for is I'm with that 30-second inversion, or right, is what I want to see is I want to see this candle right here close below this wick, right? This wick, and it didn't. And to visualize that, if we go to the 30-second chart, we were going to close below it right here. This is 9:59, and this is 9:59:30, and then this is 10 o'clock open. Yeah. So at this point, when this was trading below here, I don't want to get caught in some scam order or whatever. So then what I want to do is I just want to go break even here, because if this closes below here, I'm expecting this to just sell down into this area before then reclaiming. So for me, the logic there was like, I can go break even now, because if we don't get a closure below this level, I don't want to be in the trade anymore. So I would just go break even, let it do its thing. Or, and if it does, sorry. And if it does close below there, then I'm going to be break even. So at that point, I can like, it's a circle that just only ever leads to break even. So I close it, right? Why were you selling discounted market? Yeah, I mean, we have a different opinion on what a discounted market is, because we're in premium here and we're in premium here. So it's definitely not discounted. So yeah, don't know what you're trying to tell me, but it's definitely not discounted of the current leg. Appreciate you though. Gosh, guys, like the hostility in the chat today is so real. Like, why don't you just ask me something nice, or you know, stop accusing me of doing things that I'm not doing. So wild from you lot. We don't have Saratoga in the UK. No, I'm currently in the UK. Has anyone been to the Maldives in November? Are my glasses green? They are, yeah. Did the veneers hurt? No, they didn't. They didn't hurt one bit. I've been the most relaxed I've been for like a month, like well over 2 months. I feel very peaceful and very content right now. So yeah, I actually just ordered the like the 3 games of, is it the game of tennis, the game of golf, and the other one. I just ordered them. I had them recommended to me by several people. Um, the inner game of golf, the inner game of tennis, and the inner game of the inner game of music. Those 3. I just bought all 3 of those, so I'm going to work my way through those. You wish I had a channel? Channel in what way? You recommend the Seychelles instead of the Maldives? Hmm, okay. I'm just planning to go to the Maldives for my birthday in November. And I was just thinking, is it rainy season? If not, oh, let me ask the chat. What's my favorite color? James, what do you think my favorite color is? Yeah, Darian's got it right. It's pink, guys. Sorry. Yeah, so I'm going to read those 3 books. So I'm going to work my way through those. Is it common for the 4-hour candle to get faded when it closes so strong at 10 a.m., or is it continuation more likely? Okay, like for me, I think a 10 a.m. continuation candle is likely here, but I would always just look to be positioned in a short above here and take a stab at this selling down. But this was just a very scammy wick, so it's going to be hard for us to get position in that. It's looking like a very bad market to be trading. When's my birthday? I just said I'm looking to go away for my birthday in November. If you want my exact birthday, you are sadly going to not get that. I think you should book a trip on the 2nd of November for what? Do I think Lewis Hamilton has any chance to win a world championship? Maybe next year when the new car regs come in. Max, don't you dare. Kane thinks he's as important as the president. Bro, I honestly, you don't have to be here right now. I'm going to level with you. You don't have to be here. You do not have to listen to me. There is absolutely nothing keeping you here. I don't control your life in any single way. But the president and the other people all do. So we definitely don't have the same control, and I definitely don't believe that. So yeah. What other books did I read in Dubai? I didn't actually read many books in Dubai. I just did nothing. Max, stop. Just stop. Just stop. Just stop. Just stop. No birthday bashes this year. Yeah, I think we'll miss that one. I think I'm just gonna go to the Maldives and have a relaxing one. It's okay, Max. Don't worry. Where am I at in Dubai? I'm not in Dubai right now. Yeah. Any advice dealing with emotions in trading if your analysis and plans on point, but when you take trades, you get emotional and don't think clearly? Walk away. Honestly, just like when you're in that trade and the analysis is on point, just walk away and come back and accept the outcome. And I know that's hard for a lot of people, but if well, the 7 minute time frame, what am I doing? Um, this is very, very lethargic price today. So I would just do that. And if you can't do that, then take a break. You're hoping Checo comes back as a Cadillac driver, a Cadillac getting into Formula One. Bro put a whole can of cream on his face shining like a diamond. That thing's called lights, my boy. I actually haven't put any moisturizer on today, so thanks for calling me out on that one. How was Formula One? The Formula One was good, yeah. It was good. I was gonna go to Monaco this weekend, but I just can't make it work. So yeah, sad times. Speaking of French Riviera, I'm also thinking about going to Saint Tropez in the June. Anyone been to Saint Tropez? Anyone got any recommendations? Nick, how are you? I have a stab at the same short, the exact same level. Just this is awful RR, so I probably won't. How was the yacht? Yeah, the yacht. Kane, I have an offer for you. I will teach you to trade order flow, and you can change your screen to dark mode, so I don't get blinded every time I watch you stream. I would like to take you up on that order. Thank you. That offer. Thank you very much. Anyway, guys, I'll be joining Order Flow Labs as the chief trader of VWAPs next week. We didn't want to announce it, but here we are. So yeah, that's me. I'll definitely take you up on that though. All sarcasm aside. How did I get my premium discount to look like this? I'll let you in a little secret. Pick background, put transparency to like somewhere in the middle, not in the middle, but somewhere like on the lower end. 0, you change to white and set the opacity to 0. 0.5, you change to green and set the opacity to 0. And number 1, you set the opacity to 0 and change to red. That gets rid of the line at the bottom and the top, the opacity stuff, look. But then it makes everything else in the middle the color you pick. I'm training you genius. I know. I'm a genius. Look, I'm very much a counter order flow trader. Like right now, we can very much see the bulls are in control, right? Like we could just all see that. We don't need to see anything special to know that there are more buyers in this market than there are sellers right now. Agreed? Agreed. I like to get bearish at the around 50% of the overall range and around that hourly and 4 hour time frame. That's it. That's literally it. So there are two Leos, right? By the way, there's two Leos. One is actually pronounced Leo, and that's my friend that is inside the lab. And then there is Autoflow Leo. They're different people. He was hoping was Horner going to get booted after Monza if Max didn't place. I still hope Horner gets to boot. I think ES and NAS might have bottomed for the year. Yeah. We went down 20% in 8 days or whatever. Not going back on it right now because I'm stalking this short. And then what did we do? We then recovered the entire thing. I think that probably is the move for the year. I think the rest of the years might be a little bit stale, letting some Trump stuff hit the market. They're trying to sell this, as Leo said, but they're getting stuffed. Yeah. You missed this. Why is he disliked so much? I've never seen someone in Formula One that has such an attitude as a team principal. Like Toto is forever the professionalism. Zach kind of says things without saying it. Horner is just like, he's just an arse, at least in my opinion. Oh yeah, what time is this? 15, no. From the open, So the 15-minute, I think that is the trade, you're right. This is the trade. I should be short here. But this wick is crazy. Come on. Okay, I'm in. Whoa, 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 whoa. That was dumb. That just cost me $200. And I'm not in the trade. Did you see that? I got in 6 minis. That would have been aggressive. $52 ticks, though. That would have been nice. Why did it do that? I press this and it opens up and it immediately puts 6. Does anyone know why it's done that? And if I change this to 1 and then do this again, it just changes back to 6. Oh, this is why it's defining it from this. Huh? Okay, I'm now finally in the trade I should be in. It was the algo. It's algo time. Yeah, no, look. Sumo, look, ready? I change this to 1. Yeah, like if I sell 1 and buy 1, it'll only be 1. I go on here, I click right click, I click limit, it changes to 30. And here, it's because my risk. If I set this risk to 100, so it was something based on one of these yellows, so now it's set to 0. That's how it should be. Gee, that was crazy. I would have been in 6. That's some big size for the size of this account. It's assigned to full margin shorts. It's definitely never assigned to do that ever. If the trade went 1,000 points instantly, I'd be laughing, but it didn't. So yeah, I don't know. I've changed it all. It's okay. We're chilling. We're chilling right now. I know I do. I know I do. I need to get off trading view. Don't worry. That's on the plans. That's on the plans. Remember, guys, we've got Tracy coming on in 10 minutes, I believe. Wednesday means crude oil inventories. Why not use MT5? Because I trade futures and not CFDs. This is going to stop me, and I don't think I'm going to trade after this, to be honest. I really don't like how out of sync these are, and I really hate that I can't put my stop loss above this high right now. So, yeah, think I'm going to be done. We're going to be down like $500 on the day, yeah, including that 6 mini mess up. It is what it is. Khan, do you see how this message comes across, right? Do you actually see this? You quite literally just told me right here, told you, mate, unfinished business at the highs. And since that message, you've been wrong. You didn't say it before, but since that message, you have been wrong. You know what I mean? If this just went straight down, you wouldn't have posted that message saying, Kane, I was wrong, and we did not go revisit the highs. So do you see how bad that is, like, to just do that in general? I do. Will it let me drag my stop on the chart? Yeah, yeah. If I OCO'd them, but you have to OCO them. So why? Because OCO is not enabled through default. Back-to-back L's on NinjaTrader streams. I mean, I'm not perfect by any means. If you think I have a 100% win rate, then you are a fool. Why do I think why do I think the market's been crap recently? Um, you do have to understand we had a 40% cumulative move on NQ recently. I didn't participate on the Ninja Arena yesterday. I saw on Twitter what these were all these things, and I didn't participate. I don't know what happened. Thanks for leaving me out, guys. Appreciate that. Feeling like one of the family, you know? Yeah, I mean, look, I'm not that bothered. It's just if you if you copy my trades on the basis that I'm only ever going to make money, you are just silly. You're just a silly person. I don't advocate for that ever. ICT people not allowed. Another, I would have lost. Uh, sure, maybe. What was the rules? We can run one. I'll learn order flow and then we can run one. Order flow versus order flow. bigger and better challenges coming. And we're going to run the Kane World Cup. Leo, you can't join. Sorry. Can only be one. There can only be one, guys. The one good-looking guy in the chat. In the challenge, sorry, not in the chat. It's just me. Sorry. Drinking beer? No, it's Pepsi Max. I'm limited to one a day with my new teeth, and I need the sugar, or well, the Kane Cup. Yeah, exactly, Shab. I'm gonna run the Kane Cup. My win rate without gurus is 68%. That's good. What's wrong with that? There's nothing wrong with that. There's nothing special with anything in this game. Like, Khan, where have you been, bro? Like, since your message, we have only gone down. Can you just say we're now going down? I need something. My win rate is like -5. The vape's here. I just don't vape on this stream because it's yeah, lovely. We got ran out and now we're back. Yeah, I mean, I don't really care about the opinion of others on my model. You're not trading it and you haven't made money with it. Just like, if I started saying to Leo, order flow's a scam, which by the way, I don't believe it is, he's made a bunch of money trading it. Why the hell is he going to listen to me? Yo, can we just ban this Mohammed guy or this XXX Mohidala XXX? All he has done is post negative comments. There's literally not been a single nice comment from this person. So just ban them. Literally every single comment has been horrible. Khan's coming back. Where is he? Khan, come on. Come on, Khan. We're going up, Khan. What's my real win rate? About 50, anywhere from 50 to 70. If you ask me the first 10 days of May, it's like a good 5%. Like, yeah. Like, first 5 days of May were horrific. By the way, I like Khan. I just don't like it when people message you when your stop loss gets hit. Like, told you we were going higher. Yeah, but if it didn't get hit, then you would never have said that. So, like, I just don't like those things. If you tell me now, hey, I really am expecting us to go here before I get into a trade and don't say anything when I get stopped, and then you're like, an hour later, oh, we hit that level that I said about. I have nothing but respect for that. But you know, trying to just say like, told you, Kane, you shouldn't have got into that trade. You should listen to me. It just gets under my skin. Yeah, hindsight final boss. Yeah, we're not enemies. We're not enemies. We're not enemies. I just don't. I will always call people out for stuff like that. GXT trades. Garrett is a very good guy, and he is consistently putting money from the market. Averages 70% win rate. Averages 2 days. Yeah, I have nothing. Garrett's a good guy. Trust me, he's nice. Kane, did your trade get stopped out? Yep, my stop loss was above this high. Actually, at this high, I got top ticked, and then we have only been in profit since. Do you think we will hit London lows today? I have no clue. This is a candlestick alignment, time frame alignment, sorry, from the fractal model, which is T-Trade's model. So on the 5 minute, it will show the hourly candles. It will line up 2 seconds. There you go. These are the hourly candles, the last 4 hourly candles. On the 50 minute, it will show you the last 4 hour candles. On the daily, it will show you on the hourly, it will show you the last 4 daily candles. And on the 4 hour, it will show you the last 4 weekly candles. Here we go. So they align the time frames, and on the 1 minute, it shows you the 15-minute. So yeah, I like it. I have the indicator on pretty much for that alone right now. No, I will not. 2K likes, I will not do anything. If PS stress, no, I probably won't trade the PM session today. I'm not desperate to click this button on this market right now. We're down $544. 230 of that was from the 6 mini mess up, and then the rest was just one stop loss for like $300. So yeah.
Hey guys. Hey Kane. How are
Hey,
you?
how are you? Good.
Good. Just came in for your favorite part of the day. Crude inventories
Always.
came in plus plus 1.328 million above expected. Cushing minus 457,000. Gasoline inventories plus 816,000, and weekly distillate stocks plus 579,000. So, pretty bearish overall.
Yeah, good reaction to the downside already, making new lows on the day. I
Pretty
think,
bearish
yeah.
overall, for sure.
Yeah.
We
The
had
chart
builds
did
across
not
the
like
board
it.
except for Cushing. So,
Interesting. NQ took a leg up on that as well. Well, maybe it's just time coincidence, but yeah, I don't know. Do not know. Thank you, Tracy, though. Appreciate you. Hope you're well. I haven't seen you for a week and a half.
all right. I will see you. I know, I missed
Ciao.
you last week.
No, you
All
didn't.
right.
Stop it. Appreciate you, Tracy.
Did. All right.
We're just chilling. We're just chilling, aren't we? It's the macros. Well, there is no such thing as 10:30 macro. Do I know Trader Binu? I don't know many people. I don't know many people in this space. I just know Garrett because he's friends with T Trades, and we know T Trades very well. Am I a watch guy? I'm not a watch guy. I don't own many watches. In fact, I own none. Oh, if we do get this though, I will click this button one more because this is pretty clean actually. 15-minute high, this high, this 15-minute sweep. Yes, melting. Maybe we can make this money back. I don't want to take it if 410. So click me in and run full TP instantly, please. Wrong way. Wrong way. Wrong way. It is a whoop on my hand. I got the new whoop. Does the heart rate and whatever. I just upgraded because, yeah, I was doing an upgrade anyway. My reason for being short biased today is because we traded above weekly high yesterday and above daily high, the previous day high yesterday. So I'm actually expecting today to expand to the downside based on the next day daily bias model from T Trades, which is one of the best videos on YouTube for giving you a daily bias. You should go watch that. Yeah. I've been getting chopped all last week. I'm taking a week to buy new evals. Yeah, I don't blame you, brother. Guys, I'm going to be honest. If ES touches the opening range or this trade gets me my money back for the day, I will probably close it because I don't really like it. This is a good setup, but I don't really like the current price action. So that's the two things. Or we take this 15-minute low. This 15-minute low, I would go break even irrespective. But we have massive SMT. What was the name? If you go to T Trades' YouTube, search T Trades. You can do this after the stream though, and then go to his videos and then sort by most viewed. It's his most viewed video. What's your input on today's action filling the gap from Monday's move up? I don't know. don't really think that will happen. Um, you're like expecting the worst then, aren't you? Oh, 1, 2, 3. Here we go. It's either going to happen or it's not. Being very risk off here. I don't want to be in this trade, especially with this. It's either going to continue to push lower, or this gets a leg up and this just pushes to the highs. I'm not. Yeah, I'm not giving this much room to breathe. Yeah, out. Don't like it. Literally exactly what I didn't want to see. Lost 0 money on that though, including fees. So, um, the VWAP is in my favor. Yeah, I deleted that because whatever. What was the name again? T Trades Daily Bias. I'll just find you the video. It's a good video. It has 1 million views. Here you go. That's the video. You can copy that and do what you want with it. London has been a lot cleaner. Summer months typically London tends to do quite well. I have never traded ES in my life. Interesting story. I have one ES trade that I accidentally opened and I instantly closed it for net 0 profit. I actually paid fees on it. I just missed my mouth. That was embarrassing. I'm sure there'll be a clip of that somewhere. Love that for me. Anyway. Oh. RT trades and AM trades the same person. They are not, believe it or not. They are not. Blame it on the new Nashers. Has everyone got their sunglasses on? I'll smile for everyone. Right idea. Didn't really want to see this reaction. I just wanted to see this fall through. Not really that bothered about it. Trying to protect capital, not get money. You guess who's a scammer? Who's a scammer? These are not the Jacques Marie Marget glasses. These are from, where are these from again? These are from Moscow. You are T-Trades. I am T-Trades. No, I'm not. I'm not T-Trades. M3 is printing, is it? There's no inversion here though. This is the annoying thing. This is such barcodey candles. I read accent and said barcodey accent. I have an accent. What is my accent? Is it a British accent? That's weird. I'm not British. That's crazy. Where's my accent from? No, my glasses are from Moscow. We took a 15-minute low. Now trading higher. Yes. Yeah. Sorry. You think I'm a brummie? Lee, have a word. Lee, are you here? You think from Hertfordshire, Kenya, bottle what bot or water. Is that a real place? Terrible. Luton, Essex. He's from London. What's wrong with Brum? You tell me what's right with it, and I'll tell you what's wrong with it. Let's start there. How did I get from 130k to 1.4 million? I'm on a bit of a run, pressing my foot to the floor. You see chop like this after a large expansive move. I'm from New York. No, I'm not from New York either. This PA is sloppy. Time to start the weekend. Anyway, let's talk. Let's get back to the Maldives, right? Uh, has anyone been to the Maldives in November? That's the real question. Mike, no, never heard of that, Mike. Yeah, I like it. I'm a real streamer. Sorry, other streamers. I'm the real streamer boy. Would the real streamer boy please stand up? Can be iffy weather-wise. Cold, Maldives is overrated. Way. um, oh my God, there's just nothing in here. What's going on? What's going on? Nothing, apparently. This is crazy, crazy price action. Why is ES forgetting that it has any sort of value? That's the real question. I hate, and I mean I hate this wick. This wick's throwing me off. I have still got that 8 Steve spare, yeah. I actually have. Last week was American Kane. This week we've got London Leo. It's crazy. Or Leo. Sorry, I have a friend called Leo, and that pronounces his name, spells his name like that, but pronounces it Leo. So I don't know. It's hard. I keep bouncing between the two. Thought I was taking a break. I took a break. I was away for a week. It's long enough. Felt like a lifetime. Right, 40 seconds and I'll get short again. Maybe. We'll see. Gosh, do you think we could get to 1,000 likes? That would make my day. Begging for likes is obviously completely unprofessional, but whoever said I was a professional? So let's just beg for likes for the next 10-ish minutes. Then we hand over to Jim. No, more, sorry. 20 minutes and we hand over to Jim. Not gonna get short if we don't close below this level. Come on. 3, 2, 1. No. No bingo. Why aren't you interested in all those highs on the left? Unfinished business? Because I get bearish around 50% of the range. And we are above 50% of the range. So yeah. Why aren't you yeah. Unlike. You unliked? Huh. I said we were going for that wick. I wanted ES still down there. Yeah. Uh-huh. Interesting. Yes, Ryan, I would. I would. If one of them invests and the other one doesn't, I still take it. So I am looking all the time. I'm like this. Hence why this is over here. Because I will look at this, look at the time, look at this, look at the time. It's a really good reaction. Don't think we're going to get in the trade. I'll happily sell now just in case we buy back up. But yeah, it's looking pretty rough. Is there a 3-minute in here, 5-minute in here, nothing in here, nothing in here? Okay, this is the really hard part now, is that you actually officially also have this one. We can delete this. We can delete this. We can delete this. That's midnight. Yeah. So yeah. When did I start? I only do it based on other things. So like time frame alignment, like 15-minute lows being and highs being taken. Yeah. I do. But it doesn't mean that I'm now framing longs because ES hit 50%. I would TP based on it hitting there. Is that a WAP on my wrist? It is. It's the new one. I bought the new one. So some people up in arms, like, I'm not paying for this. You told me I would never pay for it. It's a pretty big upgrade. You're just scalping the mini range. Smart. Very, very smart. Bottle of water. Oh yeah, that sounds so much like me. That's true. That's embarrassing. Can you get me a bottle of water? Sorry, darling. Could you get me a cup of tea, please? Is that Bell? In it? You're having a laugh? Yeah. Okay, I'm down a smidge amount of money today, so it's not too much. But I've never been to Tesco's. Tesco's? I said Tesco's. I've never been to Texas. Sorry. Sorry, I read a text message. I'm going to Tesco's, do you want anything? And I put, then it was like, have you ever been to Tesco? Can you just trade the 1 second range? Cheers, Tommy T. Tommy M. I've never been to Tesco's. I'm a plonker. In the UK, is it against the law to not take tea time? Yeah, it's cardinal sin. It would be hard for you to scout live knowing people are following. Well, I wouldn't care if they're following or not. I would still do it, you know? How's my pickleball game? Yeah, it's horrendous. I am a Waitrose shopper, not an M&S shopper. Sorry. Sorry, sorry, sorry. Me and Waitrose, we go back way. For sure it's Waitrose, yeah. Waitrose through and through. Sorry. I would go into an M&S, but Ryan, I actually don't know. I kind of reset the balance. There was actually that's something that came up like 2 weeks ago. Um, someone said if you lost everything and only had $5,000 to your name, do you think you can make it back? And then I reset the account balance to 5K. So we'll see. We shall see. We shall see. We're getting good reaction off of this, which is bad. We also have more divergence on ES. So ES is now trading back at the open, and if ES trades at the open, I will not short this. I would absolutely walk away. You would like to see me make an attempt on an American accent? Well, we couldn't get to 1,000 likes today. We couldn't get to 2K viewers. So I'm not doing anything for anyone. When you lot start doing things for me, I start doing things for you. Until then, we just do it this standoff. Mm-hmm. How much you risk per trade when you're trading a 5K account? Um, it depends really. I'm a big fan of 1 mini. I'm also a big fan of like 7 micros. Don't know why. Seven just sticks out to me. Um, yeah. But typically for me, 1 mini, like what's 1 mini on this? 1 mini is $330. $330, it's like 15-ish trades. I've never had a 15 losing streak on NQ. So I think it should be good at that point. I know that's probably bad logic for a lot of people, but if I only had 5K, I would play a prop account. Yeah, 100%. I'm gonna be honest, but um, if I only had 5K in a live account, though, I would just trade it. Okay, we're in. We're currently experiencing 1 tick of drawdown. We're up 10 ticks. If you catch this video on Instagram later, where I'm like Sorry. Watch me catch a 25-hour trade on NinjaTrader live. Just mind your business, all right? Yeah, no, I'm definitely resetting the account to 5K on Monday. Like, took one trade yesterday and made well, one trade but sized up into it and I made 5K. So yeah, it's definitely getting reset. Gonna get absolutely smoked. I don't like this SMT, but it is what it is. Holding above midnight. One more push higher and then flush. We're probably just getting crushed on this deviation every time. We got hit here. We avoided it here. Now it's going back for it. This wicket is just the horrific part because this is where they want to run you. And actually, this is probably where you need to put your stop. So actually, the play might be selling here and stop above here. But I don't know. I can't do that because that ain't my model. You know what I'm saying? It's gonna be three. Well, not counting the first one because we closed the break even, and then it's just sizing was the issue. It's gonna be 0 from 2 today, but it looks good. It is what it is. Same cap, same t-shirt. Where? Where's my cap from? I think we get one ticked. No, I just really don't want to see this wick trade through, and I'm just getting caught up in the range. I just need to leave it alone. That's it, really. There's not really any magic to it. Maybe 11 a.m. might deliver. Take out that. Thing is, it's like it's just the wick. The wick's horrific. ES is already trading back around 10 a.m. open. NQ's trading higher. You could get caught in this forever. You know, it is what it is. All right then. This guy with his just got tapped in. Did you sell 50% of the wick? Yeah. Yes, it's so weak. Yeah. I wouldn't be surprised if there's now, like I said, now cracks. I'm just gonna leave it. But um the 10 a.m. hour has been the worst hour today. Took a break even here. Took two losses in here. And we move on. What invalidates that setup? I mean, I don't really care anymore what invalidates it. Yeah, 0 from 3. I'll take the break even as a loss. Doesn't bother me. Down roughly ish to our based on 1 hour risk being 1 mini. So yeah, don't fight the ball. I don't mind fighting the ball. But we shall see. I would definitely say if we get a good strong closure above some of this range today or tomorrow, then we might actually be able to buy this thing. But right now I can't buy it. Whereas you don't see any short setup. That's because we trade differently. You didn't see any short setups at 22K, but I did. You know what I'm saying? We trade differently. Not many people bought stocks at 17K and Q. I did. Do you know what I mean? It's like, no, I'm definitely not posting anything. I've got stuff to do today. Bitcoin's about, Bitcoin's just going to trade into new highs. Yeah. Ether running, maybe? Maybe? No. This guy's clearly not making 6 figures from Apex. I got banned from Apex. I'm not making any money from Apex, regardless of 6 figures. 7 figures. You don't believe I got paid that though, then go ask them. Do these glasses work? No. It depends what you're asking. No, I wouldn't get in a fourth time. For me, it's just like a hard. I don't really want to. Um, I don't want to keep trying to grab a move that isn't happening. Like, yeah, this M3 makes no sense, but I like to engage around the extremes, right? So until we get that. We're just pushing. Why did Apex ban me? I'll tell you. They didn't ban me. My accounts got frozen, and they haven't been unfrozen because if if a company, if a prop firm pay you out over $1 million, they don't want you to continue trading for them, and I can let you do the math on that. But what I will say is, I'm very glad that Apex let me trade with them full stop, and yeah. Okay, the wick got taken. Thank the Lord. Been smoked for like 5 days straight on these markets. It's a tough market. After a big expansive market, we typically do nothing for a few days. So, or a few times, and that's what we're doing. So, not nothing, we're just going sideways. Apex cuts to 250k unless lawyers get involved. That's not true. I literally never once sent Apex a letter from a lawyer ever. Not literally, not once. So you, sir, are false news. Fake news, fake news. Jim,
Hey, Kane. Hey, Jason. How you guys doing?
I'm good. Jason, I can't hear you. I don't know why.
He's almost
Sorry, how
there.
about now?
I can hear you
There
loud
you
and
go.
clear.
There you go.
How are we, gentlemen?
Jason, how you doing?
Good, man. Good. I'm good. Everything's good.
Great. Good job today, Kane. Welcome back.
I wouldn't say it's a welcome, but yeah, the market's pretty awful right now. But I'm glad to be back, irrespective of the market. So yeah, nice break. And
Well,
we have Monaco Formula One this weekend, so something to look forward to.
yeah. Sometimes you're the windshield. Sometimes you're the bug. What are you gonna do?
I'm the bug today. It is what it
Yeah.
is.
Max won last week.
Yeah, I think it kept Horner his job. No,
100%, 100%. But they're number three in the constructors championship. We're talking about F1, Jason. And if they get slipped to number four, which is possible, that could trigger that
he's getting
firing.
fired. He's getting fired. I don't know this for a fact. Obviously, I'm just saying, opinion wise, he would not be working at Red Bull by the end of the year.
Could be right, but Max is keeping him going, man. And Max has a shot at the championship, the drivers' championship. He's only in third place. He's not that far away.
I know it's crazy, isn't it? And on like by every, I mean, look, that Miami race that I went to, wow, what a drive from him! Like he was phenomenal the whole weekend.
Yeah,
And it's just the
yeah,
car was so bad. Anyway, we could talk Formula One for hours, Jim.
yeah.
I'll
Yep,
I'll
yep.
let you guys crack on with
All right, man.
with what you're doing.
I appreciate you, Kane, man. Have a good one. See you next week.
Appreciate you. Cheers, Jason. See you soon.
Take
Bye.
it easy.
Jason.
Hey.
So we had a couple of movers in the commitment of traders data, but I want to start out with a more of a subtle one, if we can today. The Canadian dollar. I have it up on the screen right here. This is the Canadian dollar, and there's been some chatter that hey, there's a move afoot here. Maybe there's a recipe for a potential short covering rally. So I pulled up the commitment of traders data, and I thought I'd ask you if you're seeing anything unusual here.
It's kind of just really coming off from what was where people were super short earlier in the year. And the Canadian dollar's been rallying since then. The bearishness in the Canadian dollar back then was immense. And you can see it's been rallying since then, and therefore the short interest has been coming off as it's rallying. They're getting squeezed, right? So that's kind of how it works, you know. I don't really necessarily see anything from here, but there certainly was some juicy stuff earlier in the year. And you see
Yeah,
it.
I mean, I'm just looking at the weekly candles. Clearly there's some resistance around spot 72.51 where my crosshairs is now, and we did have a little bit of a decrease. I'm sorry, the large specs actually added to their shorts a little bit, bucking the trend a tiny bit as well.
Yeah, I mean, I'm not big on for me at least, on the week to week. I don't think, at least for me, COT gives a big edge in shorter term move type of things. It's really just extremes where I find it to be valuable. So the extreme was kind of when it was at the low. And now it's working off that extreme, and that's really kind of all that tells me. Other people use it other ways, but I don't find a lot of value in shorter term movements for this stuff.
I got it. All right. Well, let's pivot now. Another market that was kind of interesting to me. And we don't cover this enough, I don't think, but the Russell 2000. Let me pull this data up if I can. The Russell 2000s, we just had a pretty, violent, I use the word violent. I don't know if that's the right word to use for this or not, but large specs are super, relatively strongly more negative, where the commercials are more, as you would expect, more positive for their positions. What does this tell us in this market?
Yeah, I mean, the Russell to me is very interesting here. Um, it is without a doubt the most hated place on a macro basis. Um, Small caps are bad in a trade war. Small caps are bad in a higher interest rate environment. There has been a lot of selling of small caps. It is sort of a play. It has been a horrible performer for a long time relative to the markets. And people hate it and don't want to be involved in this thing anymore. And in the meantime, I think for the first time in a long time, in this latest rebound in the stock market, the Russell has kept up with the rest of the market, and in fact done better than things like the S&P. It hasn't done better than the Nasdaq because the Nasdaq is where the most beta is, but it has done better than the other indices for the first time in a very long time. So I think that and as you can see, speculators have been selling into that because they're so, I think, conditioned to hate the Russell. Um, that to me it offers it's very interesting here.
Yeah, no, I just saw these big spikes. We were close to neutral, right, for 1, 2, 3 weeks in a row, and then boom, last week, this week, we had that takeoff. Just looking at the chart here, I'm looking at, we have a pause today, or this week, I should say, and it seems like the steam has run out, and the bears might be getting a little excited right now.
Good. I like when bears. I like when bears get excited.
All right, all right. Let's keep rolling though. I do want to throw the other big one that I saw that I wanted to get your opinion on was in corn. Let me pop this guy up and adjust my chart a little bit. So corn went from an interesting dynamic. I mean, the trend is basically from large specs being really positive to the large specs being neutral. and then the commercials being pretty a net negative to being a little bit positive right here. So that was a quick move, turnaround, so to speak.
Yeah, I think, quite frankly, in the grains, wheat is much more interesting from a COT perspective, and now from a how the market is starting to act on the back of that. Um, there was a beautiful reversal day in wheat um, on the I'm trying to get the date right here on the 13th of May, and you can see how short the large speculators have gotten here. So I, to me, if I'm trading grains, I'm trading wheat long.
Okay, so and let's remind everybody of why the setup that you like to look at.
So I like to look for when the speculators are super short and the commercials are super long, and then I'm looking to get long, and I'm looking for some kind of market confirmation in order to do so. Some market go up on bad news, that type of thing, to confirm that I want to put the trade on. So I'm looking
Okay.
at tape to agree with the idea first. I'm not just going to put it on because of COT. I think that's a dangerous thing to try and do. But once the market starts to react in a way that would be more bullish, that's when I'm looking to do that. I think you need really three things is what you want on your side for a trade. You want positioning to be extreme. You want general psychology to be at extreme levels, and then you want the market tone to be in your favor. If you can get those three things, then you get a really good risk reward trade.
Got it. So you've got like things like the WASD report, other USDA reports coming out, weather reports, international trade. Those are the kind of news events that we look for in the grain market.
Correct.
Yeah. All right, all right. So there's a potential one right there. We'll keep our eye on the wheat market, one of the originals at the exchange. Let's roll over though. Let's go back to currencies. I have my notes on the side here of things that I thought were interesting. We're going to go over to the Japanese yen. Let me find it real quickly here. See if anything's changed since last week. We talked about this last week, but I just thought we would talk about any changes at all, in your opinion, or what's going on here.
Yeah, I think the currencies in general are pretty crowded. And again, on a macro level, it's understandable why that is. Nobody likes the US dollar here, ironically, considering that everybody loved it at the beginning of the year. And now they absolutely hate it. So I think it's an interesting idea to try and look at short things like the yen and the Swiss. Um, the tone to this point has not really done a great job there. These have not, although the dollar is off of lows, but I don't think that that's a big surprise given how much other assets like stocks have rebounded. I think the dollar has actually done a pretty crappy job um, since the lows in stocks. I would have expected the dollar to have gone up a lot more. Wrong, I was there. The trade has worked, but it hasn't worked as well as like the stock trade has. So the tone's not great there. So I think before really having any kind of size dollar long or currency short, you need to get better tone here, right? And there's plenty of news that's going to be released, especially from the Japanese side, over the next few weeks that can help determine that. But right now, I think it's a great potential trade here, but I think being aggressive on it just isn't time yet until the market starts to confirm a little bit better.
Yeah, I mean, all of last year and before that even, the yen was just always down, always down, always down, almost every single day. And this is kind of now we're kind of in this zigzag sideways behavior right now, just tracking that ADMA every week.
Yeah, I mean, you have a much different macro all of a sudden for the first time in many, many, many years, decades. You've got a different monetary policy going on in Japan, right? You see the JGBs are getting crushed, and Japanese interest rates are going up a lot. So if you're playing the interest rate differential game, which is what most people do in currencies, then you are going to be favoring being long yen here. And
Yeah.
as you can see, that's what people are doing. They are favoring long yen here. So this doesn't mean that that won't continue. It just means that should it not continue, you know, there's
Yeah.
a very good risk reward the other way.
Well, it seems like the U.S. is doing its best effort to raise their own yields on their longer term debt. Bonds are crashing, notes aren't doing well.
Yeah, no, it's the macro situation here is somewhat treacherous, you know. Um, and so trying to fade that macro situation, which is what I do for the most part, can be difficult. But again, if you wait until the market tone is on your side, it's not just about positioning and all that. Positioning is one thing that gives you a possible great risk reward, but you need market tone to go your way too. You're not just going to fight the tape just because it's showing crowded, right? These things can be crowded for a very long time, and they can get more crowded, you know. So until market tone improves, I think that's what you have to wait for really to put on one of these kind of trades.
Yeah, and you kind of see, I mean, just looking at this the last, I don't know, month and a half, these levels, extreme net short in the commercials, extreme net long in the large specs, they've been consistent. I mean, they've just been some just big histogram bars not moving anywhere.
Yeah. Yeah, no, I wouldn't
Yeah.
expect them to move unless there was a forced, this is what it's all about. If the yen were to start going down, then these longs will get forced out, but doesn't mean it has to go down. Just means if it does, they can get
Yeah.
forced.
Yeah. Makes sense. All right. All right. Let's keep rolling here. Let's check out gold futures. Let me adjust my chart a little bit, folks. Ignore that fib in the upper right-hand corner. It just seems like just looking at this, I know we're looking at a chart and you adjust the scale, it looks a little different. It just seems like we're slowly tapering down, right? The large specs are slowly, little less long. The commercials are a little less short during this whole rally that we have going on.
Yeah, it's been an interesting thing to watch. Usually as markets go up, the large specs get longer, trend followers, and everybody's getting longer. And you can see they have been selling into this, which to me indicates I wouldn't be shorting gold, you know. I would be shorting if they chase it and get super long, then I would be looking to short it. But this has been an interesting move that for whatever reason they are not chasing it higher. They are actually selling into this rally, which is a surprise. I wouldn't think that a trend follower would be selling into this, and I wouldn't think that a macro person, I mean, gold is the center of the macro thing right now, really. So I
Yeah.
don't know why a macro person would be selling into that. But nevertheless, it's not for me to question why they're doing it. It's just I'm just looking at the data and going off of that. So this has certainly kept me from thinking about getting short gold, you know, which as I always say is an important thing with this COT. Sometimes the best thing it does is it keeps you from doing something stupid, you know. I am always, as a sort of bottom or top picker, is what I do, um, always looking to short huge rallies and buy markets that are going down a lot, but I won't do it until the positioning shows me. So this has at least prevented me from trying to short gold, which has been beneficial.
Yeah, so I mean, if let's say this trend continues like acutely, right? We have, the specs start really peeling off their longs, the commercials start peeling off their shorts. And the price behavior is, hovering below my area of resistance up here. That's around 3342, give or take a couple of ticks. It's not perfect, but then would you be more inclined to trigger a trade then?
If we got to the point where it showed super crowded, you know, specs were super crowded long or short and commercials were super crowded long and we got some kind of market confirmation on that, then yes, I would. Or if it went the
Yeah.
other way, if they gave in and the specs got super long, you know, then I could start looking for a short. But we got a while to go till there.
Yeah, like I said, I mean, it's just kind of I have a little trend line here. It's really subtle. It's not, if you're not depending on how you move your chart around, it could look like it's almost flatland, but it's not. It's not. It's starting to, contract a little bit. So my eye is on that going forward here, and we'll see what the macro tells us. And this is gold priced in U.S. dollars, right? You could buy gold in another currency if you wanted to.
Very careful.
Yeah. All right, all right. Let's move over to the main event, the E-mini S&P. And when I say main event, I mean that's because that's where most of the volume is. And pull this guy up, see what we're looking like here. So we had a pretty big move week over week. Large speculators are now much more short than they were. We're tracking 122,000 plus contracts, rounded up to 120. Well, we'll keep it at 122,000. And then on the upper side here, as expected, the same move, the opposite direction. Commercials are now long more. But that large spec move looks pretty big. And even the non-reporting, that's a yellow line in the middle of my histogram bars, also is kind of taking a long point of view. I mean, does this have short written all over it?
To me, it doesn't. No,
No?
no. Um, I think this shows exactly what we have seen and heard, which is that hedge funds are selling into this rally. There's the blue. Retail has been buying into this rally. There's the yellow. I think that's what this is showing. If you look at the combined of the S&P, the Russell, the Nasdaq, there has been a lot of selling into this rally. This is a hated rally. It's a doubted rally. I personally would not recommend trying to short the market. Doesn't mean that there's not going to be down days. This tells us nothing about the path or anything like that, or what's going to happen tomorrow or this week or whatever. But in general, I think you want to be trading from the long side based on what the COT is telling you. Even today, you can see, I've mentioned before as a day trade thing, but the last thing you want to do is be short on a day when the NASDAQ is leading the market higher. You can be short. I would wait until the NASDAQ is the weakest of the indices. And you see it today. The NASDAQ was the strongest right from the get-go. And look what's happening, you know? Um, and that combined with this COT stuff showing that for the most part, speculators are selling into this rally, makes me think that this rally has legs. I think there's legs here in stocks. And again, goes against the macro. This is all going against the major macro theme, right? Which is that the U.S. is horrible, and you don't want to be in the dollar, and you don't want to be in U.S. stocks, and you don't want to be in U.S. bonds, and certainly the bond thing is working. The dollar thing is somewhat working, although the dollar hasn't made for a month or so, and the stock market just kind of keeps chugging along. So I do not. And if you don't want to be long the stock market, hey, I can understand it. You think it's overvalued, you think it's whatever you want to think. It's overbought, it's overvalued, the macro is terrible, the US is going to hell, maybe you hate, the Trump administration, whatever. That's fine. But I think that people should be very careful about trying to short here. People should always be very careful about trying to short. But here, I think you should be very careful about trying to short.
That makes sense. So we'll keep an eye on that large spec number for sure. I mean, it's a great way that you laid it out. So will selling into this rally continue, or will that start reversing itself later on? I don't know, but this was a big move, so I thought we would mention it and talk about it.
It's been pretty interesting that the amount of selling into this rally. Will it continue? Who the hell knows? This is what we look at the data for. Why guess? Just pay attention to the data, and it tells us whether it happens or not. But it seemed very tough for people to get bullish here if they were bearish, all through April. A little tough to get bullish here, but so I would assume that selling probably does continue, but I never know. I never know. I try not to guess what positioning is going to do. I just let it do what it's going to do and react off of that.
Yeah, well, the news cycle doesn't help anything. It's been a little wild, you got to admit. Unplanned news from Capitol Hill.
Without a doubt. Without a doubt.
All right, let's roll. Let's keep rolling, man. I think I want to go, since you kind of introduced it, let's go to the 30-year Treasury bond, and then we could take a look at the 10-year note. They're a little bit of a different animal, but they're not. Let's take a peek. This is the 30-year U.S. Treasury bonds. They've been selling off the last, I don't know, 4 weeks. We're actually trying to track potentially a 110 handle, which I think we saw back in January. There's that low tick. That low tick was approximately 110, 20-ish, something like that. But it seems like we're trying to get there again from a price point of view. And interestingly enough, the non-reporting community here is super bullish as we are falling out of bed.
A little scary, right? Yeah, and there's issues going on with this data for fixed income because of the big basis trade that hedge funds have put on is skewing this data, but that won't really affect the small speculator numbers. So that's probably the most important ones to look into. So yeah, they're too long, and the market is going down, and that's probably not a good thing. And you can then put it together and say, well, if the treasuries are going to keep going down, isn't that going to be bad for stocks at some point? And you may be right. At some point, what point is that? You can try to guess what point that is, or you can let the market tell you what point that is, right? I would prefer to let the market tell me. That's just kind of how I trade. I trust the markets to tell me what to do instead of me telling the markets what to do. I don't fight the tape. That's a mistake over time. But yeah, the bonds are certainly interesting. And the truth is, if you think that bonds are going to go down, and therefore you want to short stocks, I mean, why not just short bonds? Why even play that game,
Right, exactly. And you can do that with futures pretty easy, everybody. I don't know if I showed you, I can't remember if I showed you this chart. Oh man, look at all that mess. Forget all those numbers up there. The E-mini S&P, let me fix this really fast. How do I do that? That's okay. We'll fix it later. I don't want to slow our roll. So this is the E-mini S&P is blue. The 30-year Treasury bond is green. And all of these lines, this bowl of spaghetti I have at the bottom, these are just the correlation based on different look backs. And so I started with the 8. This is the 8 period look back. And we had this, it was almost perfectly correlated at the end of April, which was not textbook, right? You're supposed to, hey, bonds go up, equity's supposed to go down, and vice versa. This was 100% correlated. Then we kind of came back down to normal, right? Well, when I say normal, this inverse relationship we're supposed to have with price. That was close to almost perfectly negatively correlated within a couple of weeks. Now we're arcing back up. I know it's only an 8-day look back. That's why I added 21 and some other lines here. So the short term we're kind of arcing back up away from that correlation toward a positive correlation. The longer ones are still doing what they're supposed to do. Does this correlation tell us anything?
Yeah, it tells you that it's failing. Like everybody wants to kind of be short stocks because they're looking at the correlation to bonds, and that's not working, right? Which is in itself a market confirmation slash news failure thing, right? If stocks are supposed to be going down when bonds are going down, and in fact stocks are going up when bonds are going down, then you're fighting the tape. That's what you're doing. And again, it doesn't mean that that correlation won't come back. Does it come back by bonds going up or by stocks going down? Who knows? But again, I'll say it a million times. If that's the game you want to play, at least let the market tell you when to do that, right? Rather than you telling the market when to do that, right? Um, it's not like people don't see this. You're seeing something. Hey, rates are going up, stocks should be going down. Well, that's not really a lot of value, right?
Yeah.
Everybody sees that. You've got a billion people trading this market. You've got hedge funds trading huge money. They fully realize this. This is not a surprise, right?
Yeah.
So thinking that there's an edge in that kind of thinking, I think is dangerous. Um, and if you truly believe that's the case, it's fine. But like I say, let the market confirm it first and then go with it, you know? I mean, the
Yeah.
market is certainly not confirming it. Bonds are down again today. S&Ps are down 7 points. The Nasdaq's up whatever. And, the Nasdaq leading the whole way. And, as always, I question you see the Dow down, right? And the Russell down. These are much
Yeah.
more interest rate sensitive, right? I can't believe that the Nasdaq is very interest rate sensitive, quite frankly. Companies that are growing at 30, 40% a quarter or whatever these companies grow at, right?
Yeah.
Is a move in interest rates from 4.5 to 5% really going to hurt them that much? Are people going to stop buying, iPhones on cycle because interest rates go to 4.5 to 5%? Um, I question that, right? So
Yeah.
I think that's something you got to watch out for.
Yeah, you mentioned the Dow. I mean, I one of the things I don't trust about it makes it harder to pay attention to the Dow because there's only 30 components, and if you get one or two rogue components in there, then all of a sudden we have some unsystematic price movements, and so now I got to pay attention to 30 stocks plus an index instead of just, hey, S&P's got 500 in there, it should act a little more systematically.
You would think so.
Yeah. Any event, going to the 10-year note, we just looked at the 30-year. 10-year, we're tracking over 4.5 last time I checked on cash yield right now. Maybe this should be a more important market considering its benchmark sometimes. Well, at least what they say is the benchmark to mortgages and stuff like that.
Right.
So does the COT help us at all right now or no?
Like I say, this data has been so skewed by the huge amount of carry trades that these people have done that I
Yeah.
don't know that COT is very helpful in fixed income here. You can look at the shorter end stuff too, the 5 years and all that, and it's going to show the same thing. Um, and I think the amount of skew in this data because of this basis trade that
Yep.
the hedge funds are doing has rendered this a hell of a lot less useful,
Yeah.
unfortunately. But
Yeah.
I don't make the rules, I just try to follow them,
No, I know. I know. I know.
and
Well,
keeping aware of that fact, I think is important here.
all right, I think we have time to squeeze in crude oil. There we go. This has been an interesting market. Fortunate for us, we have Tracy to distill all the macro stuff going on all over the world in this market. And, I don't know. We've been at a 61 handle for, I mean, I'm going to just say sub 70, right? Less than $70 handle for couple of months now. And we seem to be kind of consolidating here below my key moving averages. Just kind of, I don't know if it's capitulation, if it's happiness between administrations or what's going on here, but we're kind of sideways here. So I don't know. Again, I'm looking at the COT data. The non-reporting is probably not a factor in this one. And then the commercials and the large specs seem to be, status quo.
Yeah, there's not a lot of not a lot. I mean, you can see it that high up there where speculators had gotten very long, the blue had gotten very high, and the red had gotten very low, right?
Hmm.
And that ended up being the market high, but we're really kind of in neutral territory here. I don't see a lot of edge, at least in terms of positioning, in crude oil here at all. So there's no trade for me there. Just means it's not sort of a table that I'm sitting at right now. And that's the truth about most of the markets most of the time. These things end up showing some value in a couple markets every few months, but right now I don't see any value in the positioning in crude oil.
Yeah. I gotcha. I mean, I'm even just look at the weekly candles. We have a baby candle now. Last week we had a baby candle with some symmetrical wicks around them. So even if you're not looking at COT and you're looking at the last 2 weeks of, well, I know we're early into this second week, but last week a price action going through now, it's like, all right, nothing's really changing here.
I mean, 2 weeks ago had some pretty good price action, right? Those are the weekly candles you're looking at,
I'm looking at a weekly, yeah.
right? So, that was a reversal week, and that was on a
Yeah.
bad news thing, right? Over, oh, sorry, I'm getting something,
Hey,
but
hang
you know,
tight, Anthony. We're almost there, buddy.
over the weekend there was some pretty bad news, and the market gapped down on Monday morning, and that was the low
Yeah.
week. So the price action was pretty good, but um, again, markets go down. You trade them how you want. For my particular trading, I need a lot of crowdedness on one side to give me the risk reward, and that just isn't there yet. I don't know if you have the Bitcoin COT, but I know we've been focusing on that the last few weeks too, saying that people have gotten or shorting. This is another example, and we've seen a lot more of this in recent years than I've ever seen before. But people were shorting Bitcoin into the latest rally,
Yeah.
which indicated that the rally could be sustainable. And in fact, as it turns out, I think we're making new highs today. So
Yeah. Bitcoin's on the
that
move. I
started
have it.
showing up about the 85, 86,000 level when Bitcoin started to move up. And all of a sudden, the speculators were aggressively shorting into that move up. And lo and behold, here we are back at highs.
Yeah. Yeah, no, I know. I'm trying to pull in the COT data for the BTC. I have a trouble ticket going. I'm having trouble doing it. I'll get that sorted out. But yeah, we're making new highs right now. It's just a rally going on right now. So, Jason, thanks for spending time with me today. Appreciate your insights on these key futures markets that we look at all the time. And thanks for being here. Looking forward to talking to you again next week.
All right, Jim. Thanks a lot.
All right, thanks, Jason. Jason Shapiro, Crowded Market Report, everybody. Um, Next guest, I've missed you, man. You haven't been around for a while. It's Anthony Drager with, again, better hair and a better suntan than I have. Oh, I can't hear you, man.
Both are natural, Jim. Thanks, bud. Good to see you.
That's not spray tan?
No, not a spray tan. I've never done that. I'm not opposed to it, nor will I judge anybody who does it. But yeah, just the sun. You stay out in the sun, you tend to get a tan. I coach baseball too, so I'm
Uh,
out in the outdoors a lot.
All right, so for those of you who know, so we're a NinjaTrader Live 2.0 on steroids, and we have a lot of new folks that are participating in the community itself. A lot of folks who don't know your story because they weren't around the first time around. And I just kind of wanted to real quickly, right, from floor trader to brick and mortar prop shop to online, kind of give us a quick like trajectory there.
Oh, wow. 17, I got a job as a runner, 1991. Summer job. Fell in love with the business because I kind of knew it existed, and Chicago's got the two biggest futures exchanges, the CME and the Board of Trade. So as a 17-year-old, I grew up quick. It wasn't all boys type of club, the business back then. And so when you got down there, you either liked it or didn't like. I loved it. So couldn't get back down there when I tried after graduating high school. So I did electrical work and went to school at night, college-wise, and finally got back down in 96. Was a trade checker in the Eurodollar pit. That's when they had two trading floors, the CME, and also then an ARB clerk. That's all the hand signals, all the yelling and screaming that you might see on YouTube videos. But I wanted to trade, and I was kind of going nowhere as an ARB clerk. A lot of those guys could make decent money, but it's not what you want to keep doing if you go down there to trade. But it was really expensive to trade. If you remember, I know you're kind of similar background as me, but it would cost thousands of dollars per month to lease a seat. And but at the Board of Trade, they were trading Dow futures. They introduced that contract in like 97 or whatever, and it was less expensive. So I got my membership and started trading on the floor in late 1999, Dow futures. And so couldn't make a dime, couldn't raise my arm to trade because it was all random to me. I knew all the open outcry. I took classes to learn how to trade and everything else, but it just, people thought it was, you were afraid. And I was like, I don't know if I'm afraid. It's just, I have no idea where price is going. Why would I get long or short? It was kind of like capital preservation mode. Long story longer, Jim. I hear about this prop firm, didn't know what a prop firm was. They were trading on a computer. So this guy says, come out, I'll show you what we're doing. Northern suburb of Chicago. It's like noon, right? And he's walking me around. It's got all these workstations, but nobody's there. It's like 12:30. And I go, well, where is everyone? He says, by 10:30, 11 o'clock, everybody leaves. We trade European session. I said, the whole session, 1 a.m.? He goes, no, like the second half. They come here at 6 or 7. They're done by 11. He says, if you're interested in us hiring you, come back next week when the owner is back and he'll interview you. So I was living with my mom and dad still. I was 24, 25. So I asked my dad, what do you think about this job if I get offered it? He says, what time did you say the guys leave? I said 10:30, 11. He says, get your butt there before 10:30 and look at the cars in the parking lot. If the cars are nice, they're making money, take the job. So that was my story. Cars were nice. The interview went well, and he hired me on the spot. He said, one last question, though, before he said you could come aboard. He says, what makes you think you're going to make money here? And I said, well, because I'm putting myself around others that are doing it. And he goes, stop right there. That's the answer I'm looking for. He says, you don't have to check this guy's referrals on his resume. If you want the job, you could start Monday. That was almost exactly 25 years ago. It was April 24th, 2000 is my first day trading electronically. Eurex, which many viewers don't realize, Eurex is the futures exchange that pioneered trading on a computer. The CME and the Board of Trade were late making the transition from the floor to the computer in early 2000, man. This prop firm I was with, Jim, had been doing it since 1996. And think about 4 years, 5 years ahead of the U.S. exchanges in technology. That's like a lifetime. But there's a lot of politics involved in getting things to the PC. So again, the German exchange Eurex kind of pioneered it. I started trading Euro stocks and DAX futures. And I find it interesting what you were talking about with the interest rates, because that was the flagship product of Eurex, the Boone Bobble shots. That's their 10-year, 5-year, 2-year, right? And then the DAX was the German kind of equivalent to our NASDAQ, and the Euro stocks back then was the equivalent of maybe the S&P. It covered more stocks, European companies, and everything else. So, yeah, that was my kind of beginning, and I started doing well right away because I kind of knew how to trade, and the fear of not worrying about, like in the pit, you almost felt like if you don't want to be embarrassed sometimes not knowing what you're doing. But for me, it wasn't that, Jim. It was, again, if I buy 55, I don't know if it's going to 60 or 45, where the next print is. So it was just like, I don't want to just take shots and guesses. But in the electronic environment, there was more of actual techniques of compare, contrast, and order flow. The two things that you need to read, find, and learn. And I've been fascinating the last 10 years of really working with other people, how everyone understands the techniques of compare, contrast, and buyers and sellers for everything they buy and sell. And then they open up a trading account and seem to ignore those two concepts. And they get distracted with a lot of Fibonacci stuff and Bollinger Bands. And not that those things are bad, but that's not the first stuff you should really work towards. You got to keep your eye on the things that we all use to value the price of something. That's all you're trading, is you're trading an instrument with a price attached to it. So what's going to drive it? Well, if there's a correlation in a relationship, know that. Talk about that. If there's a lead, that's your best edge of all. You know, you could trade with your feet, put the mouse down on the floor and trade with your toes. If there's a lead lag, and generally there's not, but if there is, you need to know that to create a better opinion as to what the heck's going on. So, I mean, that's kind of how my career went, and my success on the screen happened pretty quickly in 2000. I left the prop firm in like 2007 because it was 50-50 split. Then it's a 75-25 split, the way the contracts were. And 25% of a lot of money is a lot of money. And I seen other guys start to leave and they were successful. So I did it. Perfect time to leave because of the financial crisis started in the summer of '07. So I went on my own, like a lot of guys did, and did really well also. And just, then became familiar, had a relationship with a software guy and learned that business, like the software business, and how people, man, how people, they get into this business and it's not their fault, but they really get into this business with very little chance to succeed because they don't know what they don't know, if that makes sense. And they get
Yeah.
distracted by the internet oftentimes. So it's hard. And then you guys come along, Ninja come along, and right away created their ecosystem, which gave people a little bit better chance to find maybe better tools and better education and everything. But yeah, I mean that's the way this business has gone, and more people are trading online. Obviously, Bitcoin has made trading more popular, right?
Yeah.
Even if people don't trade Bitcoin, they trade because they got introduced that, hey, you could do this and do it daily. So a
Yeah.
lot of people I run into in the education side of it are people who have been successful at another business and really love this,
Yeah.
but realize they're missing something. Sorry, Jim, if I
So
went on too long.
no. That's what I wanted to know. So let's kind of fast forward to now, Edge Trading Group, which is what you formed, and you have a special, a special secret sauce on how you look for day trades and how you try to identify buyers and sellers and what they're going to do with. Let's talk a little bit about your the things you look at for a day trade.
So we call it kind of slang as the puke tool. Why is it called that? If you remember from the floor, the word puke was synonymous with exiting a losing trade. Okay. So everybody's long and they're down money. Where'd you puke it at? I puked it at 15, 17, even whatever. So that word was always used to when you were talking about trading. And so what's important about the software we have and we use is it just tracks a sample size of other people's positions. So we assess, hey, there are a lot of people long in this area. How do you know that? Well, we compare it to how many people are short in that area. And people have to understand the value of following other people's positions. We don't have everyone's position. We don't claim to, but a sample size of the way we filter the MBO data the CME puts out. We were able to come to the realization that, these buy orders are being used to open a long. And so we do all the mathematics and everything else to say, okay, when it happens this way, these are longs, these are shorts. Let's measure how many longs there are versus how many shorts. Let's measure the average price people are long from in the last hour, the average price people are short from in the last hour, and when longs or shorts come in. And so some people might be like, well, where's the value in that? Well, let me tell you something. Citadel, one of the biggest hedge funds in the world, buys order flow from a bunch of brokers. Why do they do that? They do that because those are the answers to the test. They're not like great market timers when they bring in employees. They just have information that most of the rest of the world doesn't have. So, for example, if I told you, hey, Jim, I know when a big 1,000-lot S&P order is going to come in 3 seconds before it comes in. That's all the information you need, and you would just front run that. Now, nobody has that, nor do I have that, but maybe some people in the hedge fund community, they do have that. This isn't about like trying to get that or complaining about it. Hey, good for them. But know what the edge is. Know where the advantages are. Knowing other people's positions mean this. If I'm long and you're long, and a lot of people are long, what are we to cover that long position? We're a seller. We have to sell next. We're long and we have to sell to cover that long position. Well, if there's a lot of longs, it's easy to say there's a lot of sellers coming to the market. And now, okay, people have that aha moment because we're not predicting where the future price is going to be only. We're trying to predict where the future buyers and sellers are going to come in. Okay. Most people just look at where buying and selling has come in, but where is it going to come in? Because that's what is going to give you some predictive skill, is where is the buyers going to come from? Where are the sellers going to come from? If I'm bearish and I think the S&Ps are going to go down, I want there to be a lot of what? Longs stuck in the market. Why? Because when you're long, you now turn into a seller. If there's a lot of longs, there's a lot of sellers. Aha, I just predicted not only future sellers, but where they're going to come from. So having that kind of idea and reading order flow, I call them order flow moments. Like everybody is into order flow and reading order flow. What does it mean? It's just a bunch of numbers on the screen. You got to break it down into a couple order flow moments. It's like, hey, there are more longs than shorts. Don't be long. You don't want that competition. You don't want a lot of people long in the market if you're long, because there's too many
But
sellers.
Anthony, wouldn't somebody argue, well, everyone's following the trend, so they're all going to be successful?
And they'd be wrong, you know. So they would be, it's all about being in the right be the timing of it. So you could be right in your opinion and lose money because you keep picking bad spots to get long. So you could be right and say the S&Ps are going to close 40 points higher than they are right now. All right. But you can't just buy and at the close sell it. You have to only maybe risk 2 points. So you could be picking bad spots, playing it from the long side all the way up and keep getting stopped out. So even if you have a good bias, you still have to pick good locations to execute that bias. So if the trend's up, fine. That means you're bullish. All right. But you can't just buy and take a nap and wake up and get out. You still have to manage your risk and you still have to pick good locations. So listen, I break everything down on my website like everybody breaks down their strategy. Their strategy is broken down into ready, aim, fire. Ready is what gives you an opinion, bullish or bearish. Aim is, well, where's your support resistance? And fire is what makes you click the mouse. So a lot of people don't realize that their strategy is broken down that way. Sometimes they're like, well, my ready was, I was mad because my last 3 short trades were losers, so now I'm bullish. All right, well, that's a bad step one, but that's a ready. And then, well, why did you buy it there? Well, because I've got the Bollinger Bands were sweeping in and it looked like a good, okay, well, that's your step 2. What got you actually long? And they were like, I didn't want to miss it, right? So that's a bad progression, but it's a ready, aim, fire progression nonetheless. So break down what you're doing, because you could have an excellent step 1, Jim. You could be excellent in predicting where the S&Ps are going, right? The trend. It's the step 3 that might be terrible. And then a lot of people get in and they try to get better at a step they're good at. They're like, well, I just got to pick and come up with better opinions. No, your opinion's fine.
So could I use the word MBO imbalance? Does that make any sense? MBO.
MBO imbalance. Well, that's MBO is market by order, and then they just profile and give you all the details about an order. I would say just when we're talking about, like, are you talking about our longs and shorts?
Well, yeah, what I'm trying to get to is, is this when you're day trading, does this typically build, right? Does this typically build and then you get your fire level, or is this something that just could happen quick, just on a snap of the finger?
No, we have it on 2-minute and then 60-minute are 2 breakdowns. So over the last 2 minutes, how many people open up a long or short position, and we compare both of them, and then we run over the last 60 minutes. And so OPP is the acronym, other people's position. Okay. So, and it's generally that particular part of the tool is a fire, right? Of the ready, aim, fire progression. It's like, okay, you're bullish for any number of reasons. You're in an area of support. So you're sitting up in your chair and you're ready and you're aiming. And now step 3 in this example would be a bunch of shorts come in. And now you could accurately assume a bunch of shorts come in. What are they now? They're buyers. What is it you need for the market to go up? Buyers. So that would essentially, in this example, be your fire in that ready, aim, fire progression. Does that make sense?
Yeah, but in that setup though, do you wait to get to a certain technical level based on whatever you're looking at in a chart or no?
Yes, support resistance. Now, support we use, a lot of people have different reasons to have support resistance, and that's fine. We use what we call PWAP. PWAP is position weighted average price. So because we have the sample size of longs and shorts, we take and say, okay, in the last hour, what's the average price people got long from and where they got short from? And we draw 2 dotted lines, green for longs, red for shorts. So those become what I've found to be the best support resistance lines I've ever been able to come up with. So the market, what's important to the market is what we're trying to find. I don't care about my opinion. I care about the market's opinion. I'm just trying to follow it. So I try to remove the personality out of it and be like, it's not my opinion. It's the market's opinion. I'm just trying to follow. So what is the market worried about? Well, if the average price right now is around 40 even in the S&Ps of where in the last hour shorts are short from. Okay. So that's probably going to be good support when it tests that. Why? Well, if shorts are stuck at 40 even, just think if you're short at 40, Jim, and right now it's trading 45, you got 5 points of heat. Starts coming back down to where you got short and all that pain started. What is Jim trying to do? Cover that short probably.
Get rid of my pain.
There you go. So if Jim is trying to do that, that's just one person. But if the market is trying to do that, if the market is indeed short on average from 40 even, you're going to have the dynamic of people begging to buy it there. And that's always going to be the dynamic that makes support, period. Whatever you use to come up with your support levels, it has to have people that have to buy it in that area for it to work and then bounce and roll. Why does it have to have that? Think about it a second. If a lot of people are short from 40 and price comes down to 40 and they're begging to cover that short, they're buyers. They have to buy it. Why? Because they have a position they need to close. They're emotional. Why? Because they just took 5, maybe 10 points of heat. And this is maybe the first opportunity that they could break even on it. Correct? Then if indeed that's the dynamic, price comes down, doesn't fill all of them, starts to walk back up. What are they doing? They're willing to just, you know what? I'll just buy 41s. I'll just buy 42s. I'll buy 42 half. They begin to chase it. And that's why you get price to go to 40, stop, and then pop. You get the people begging to try to buy it. They're not getting filled. Then they get anxious and they start to chase. You have to have that. That's why price moves.
So the longer you're stuck in a position, the better the setup.
The better the location or the support might be. In this case, stuck shorts. Also, how many times did it test that spot? If it's the first or second test, it's going to be better. The more support gets tested, the less likely it's going to work. People think the opposite. They actually come up with their support because they see how many times 40 even worked. It's like, too late. You should have been buying it at 40 even for another reason. But the more, it's like running into a door, Jim. If you're trying to bust through the door, every time you run into it, it's loosening up the hinges a little bit more and more and more. That's the same dynamic that takes place with price. The more it touches a spot, the fourth, fifth, sixth, it's going to go through it. Yet most people actually will say, hey, this is great support. Well, why do you say that? Well, look how long it's held it. So it's the opposite. And a lot about trading and your advantages and what's important is generally the opposite of what you would have thought when you came in. You know what I mean? And so when you talk about the setup, for me, example, I like a lot of breakouts. So I'm going to use as my step 2 our PWAPs as support or resistance. So what I would be looking at is if price comes down to the green PWAP like it did, 44, 45, or you're not looking at what I'm looking at, but we got 44, 3/4, 45 evens where our green PWAP is. And if you're going to use that as support, all right, you're fighting to get long there. What now I want to see to execute that long would be what? Bunch of shorts that pile in. More shorts and longs. More shorts and longs mean more buyers and sellers. What does it take for the price of anything to go up? More buyers and sellers. You have to get that for the price of anything to go up. That's why one of the first videos I tell people to watch, and it's on my YouTube channel, are like the 4 golden rules that make price move. Like, why does price move? Nobody can answer those questions. You watch that video and you're like, all right, that makes sense. So you should know why price moves if you're trying to predict price. And most people can't articulate it. And it goes simply like, hey, listen, more buyers than sellers, price is going to go up. Okay, great. How do you get there? What do you mean, how do you get there? How do you get to make the determination there's going to be more buyers than sellers? Well, more shorts than longs. All right, good. Why? Because shorts are future buyers and longs are future sellers. So if you have more shorts, you have more buyers than sellers. And when you start thinking like it that way, is the first time you're truly starting to read order flow and understanding why the hell price moves and why stuck shorts create bullishness. Stuck longs is not what you want if you're long, because a bunch of longs mean a bunch of sellers. And hey, bunch of sellers, no matter what the product is going to cause that product to go down in price. So we're trying to predict the future buyers and sellers. People got to think about it that way. Forget about what price is going to do. You have to think, where are the buyers and sellers going to come from? Because that's what you need for your bullish bias to work. You need more future buyers and sellers. And you need people who want to buy it, not already bought it. If I already bought it, I already shook hands, I'm out. But if I want to buy it and I didn't, I'm still important to price because I'm still active trying to do something. Go ahead. Sorry.
So in your example, all right, so you're not selling the 40s. You're not even waiting for, the selling the 45s, right? You're doing the opposite. You're saying, okay, nope, all these folks that are stuck here, when we come back down to 40, then I want to become a buyer because they're going to be around that area, right? And then I want to become a buyer at that point. So you're not looking for continuation. I'm going to get short at a better price than everybody else. You're going to do the opposite because they're holding the inventory they have to get rid of.
Yeah, other people's position. If I think that there is support because there are shorts, you call an inventory anything else. Other people's positions is what I'm tracking. So if I think the market is short at 40, then I think it's going to be good support because those shorts are going to try to cover their shorts, which they're buyers. That's what you need for good support to be good. All right. So going through your example right now, our PWAPs move like a VWAP. Right? You see your white line on your chart. Are you showing that chart right now to the audience?
So we see, it's an E-mini S&P chart right now. I have a 10-minute chart, Anthony.
Our PWAPs move like that white line. We're higher. Our green PWAP has been running at 44, 45, kind of straight sideways. And it's the bottom of the range for the last, I don't know, probably hour since 10 Central. I don't tell people, hey, these are great. You gotta use them. I tell people, don't take my word for it. Watch it and come to your own conclusions. And so go to the YouTube channel and understand why they would work, though. Understand the dynamic of what and what they're showing, so you know why they would work when they work. But come to your own conclusions. Don't ever take anybody's word for anything. People have to make sense to you in order for something to be understood or something to work for you. Nobody would disagree with me in the world that after you buy to get long, you are now a seller to cover. Every long is at some point a seller to cover, especially short time frame day traders, right? Jim, you're long, you're a seller. I know you could add to the position and get longer. I get that. But you get my point. When you're long, to cover that position, you are now a seller. Well, heck, I'm trying to predict future sellers. So knowing other people's positions is vital. It's imperative that you understand that concept, because I had one guy say, when I explained to him the how great support is great support, where a lot of shorts are there and then there's a lot of buyers that would have to come to cover that short. But they were like, yeah, that would help for price to go up. I go, help? No. It's not something that would be helpful and create the price. It's what's necessary for price to go up. You have to have more buyers than sellers for the price of anything to go up. So you got to know what creates future buyers and future sellers, because that is what everybody is trying to predict, whether you know it or not.
Couple seconds left here, Anthony. What is there some futures markets where this is where you focus on more over others, or is this a universal idea?
It's, well, for anything that has MBO, but it's the S&P, NASDAQ, and the stock index futures. You know what I mean? So again, I tell people, go watch a couple of the YouTube videos, search Edge Trading Group on YouTube, watch a couple of short videos, and have a clickable aha moment to understand the concept of other people's positions and how you use that to create better kind of locations to execute your opinion.
Very awesome. All right, so I threw it was easy for me just to go ahead and throw your X handle into the chat. Edge Trading Group is what you want to search when you go to YouTube.
Yes, sir.
And they'll find you and how to get a hold of you and all that stuff.
That's awesome, Jim. Nice talking to you again. Good luck with the show.
Yeah, my pleasure. Thank you for being on, Anthony. I look forward to talking to you again. We are done for the morning. We had a great morning, everybody. Appreciate everybody being part of the NinjaTrader community. Again, outstanding community that we have built here. Appreciate everybody. We're gonna we're gonna be back at 2:30 East Coast time. Me and Shai are gonna do a hot commodities report, and there are some commodities that are moving, and it's gonna be an interesting segment. And then Order Flow Labs, I believe it's Nick and Leo this afternoon. Bear with me 1 second and I'll triple check my cheat sheet here. Yep, it is. Nick and Leo are going to be trading the close Order Flow Labs. Hopefully we will see you there. In the meantime, relax and have a great lunch, everybody.